Start of cash equity trading on Francine Lacqua in London with Tom McKenzie.
And here are your top stories. Risk on, risk off. Europe is set to open higher after Hong Kong shares lead gains in Asia. Traders await today's FOMC minutes as former Fed official Bill Dudley says a US recession is pretty likely. Hitting pause, China is said to be moving away from massive spending on semiconductors as the resurgence of COVID strains the nation's finances. Plus, Kevin McCarthy loses 3 rounds of voting to become US Speaker of the House, foreshadowing deepening legislative gridlock in Washington.
Tom, if you take a look at the futures, and first of all, Happy New Year to all of our viewers. My first day back, actually. I know Tom was doing the shift yesterday. If you look at futures, they're actually on a high at the moment, gaining some 0.5%. And we also have inflation figures from France that came in a little bit better than expected, so less strong. That helps the job of the ECB.
Yeah, absolutely. And we're seeing that play through in the European debt markets in particular. The euro is stronger. That's more of a dollar story at this point. But there is a bid for European debt, and we can look at that shortly. And the flurry of news out of China, and most of it positive, quite frankly, in terms of the geopolitics around Australia and coal changes there, but also a focus on shoring up the developers alongside, of course, this broader shift away from COVID zero. And whether or not we're at a pivot point when it comes to China is possibly a discussion point. We have the FOMC minutes out later today, and then, of course, non-farm payrolls on Friday. They open then strong in the first few seconds. The Spanish IBEX up 0.6%. Over in France, again, as Francine was saying, softer than expected CPI. So arguably suggesting that the ECB is seeing some work come through in terms of the rate hikes that's pushed through. Of course, 250 basis points last year. The CAC currently up 0.6%. Here in the UK, the FTSE 100 gaining 0.2% after a strong session yesterday. Inflation, particularly food inflation, remains eye-wateringly high in the UK, up above 13.3% on the last print that came through earlier. Italy and the FTSE there, the FTSE mid currently up 0.4%. Let's switch it over, see how things are playing out as we look ahead to the future stateside. Yes, we saw some selling pressure, particularly in the tech sector. Apple falling, Tesla rout there of 13%, and further pain for Elon Musk. But it is the story around China and the approval of a capital raise by Ant, part of the Alibaba group, 1.5 billion. And that really has lifted broadly Chinese tech listed in Hong Kong. You're seeing that play out across the index, more than 4.4%. We'll be looking for process for the read across in the European markets on that story. Future stateside looking to gains of 0.3% after some losses of around 0.7% yesterday. The Bloomberg dollar index, as I mentioned, down 0.5%. That's giving a bid to the likes of the pound and the euro and the yen. And the benchmark, 367 now on the US 10-year, so below 3.7. You saw yields moving lower by 13 basis points yesterday. It's the best start for treasuries in a long time. Currently, that move by 6 basis points lower, again, below 3.7 on the US benchmark. Let's get over now to Bloomberg Managing Editor, MLive Managing Editor Mark Cudmore. Mark, I know you're looking at the Hang Seng Index.
Yes, indeed, Tom. You know it's a regular favorite of mine. Good morning to you. So this has been an incredible rally. In fact, 41.3% since the end of October, just over 2 months. That's an annualized rate of return of 597.8%. Not bad if you can actually make that in a year. But of course, we don't expect that to continue in a straight line for the rest of the year. When will it stop, though? I think the important thing when you're looking at this Hong Kong market is that the longer-term fundamental picture is so clearly positive. Every single story around it, the tailwind for the Chinese economy, whether it's the COVID story, whether it's the tech sector, whether it's the property sector, whether it's geopolitics, everything is moving in supportive of this market. It was massively discounted. Back here, it had never been as cheap ever before in history. So therefore, it's a cheap market with positive fundamentals, and it's under-owned by the world, who's been late to chase this rally and is suspicious of how quickly it's going. It is certainly going too fast, but so because of that, I'm like, well, at some point it's got to pull back, even if longer term is very positive. When is that? So I'm drawn to technicals. Very rare for me. First of all, we had a bullish engulfing candle for the first day of the new year. That is where we try a new low and basically rally so hard that we make a new high and close above the previous day's open. That is a very positive sign, especially since we jumped again today. So looking at a 6-month view, it looks like we have more upside. Let's take it very quickly to the 2-year view to provide a little bit of longer term context. There's 2 things I want to do this chart. One is to show that, yeah, it's been an incredible rally. If we get the second chart, maybe we won't get it. If we get the second chart, you'll see that even though it's been an incredible rally, it's still massively down on 2 years. It doesn't look like anyone's going to change the chart. But what I was going to show is, there we go. Even though it's an incredible 40% rally, really we're just back to kind of the levels that seemed quite depressed earlier on this year. And in fact, while I thought this was the low in Hong Kong stocks, love that, a bit of a gloat there, I'm actually going to mock myself because I actually also thought this was the low back here. And I'm only just about onside from that after being about 30% offside. But if you're looking for a reason for this rally to pause, this lovely 2-year trend line might be one reason for it to pause. It's only about 5% above the market today. Maybe that's a short-term technical reason, but the fundamentals say that overall over the next year, this is going much higher.
Mark, I just can't believe this is like new year, new Mark looking at technical analysis. Great as always. Thank you so much, Mark. And I'm looking forward to your morning thoughts in the year ahead. Or Bloomberg, MLive Managing Editor, Mark Cudmore. Now, European stocks so far had a strong start to the year. Again, it's a 0.5% gain. So is that a sign of wider risk appetite in the markets now? For more on this, let's talk to Tatiana Grill-Castro, Portfolio Manager and Co-Head of Public Markets at Muzinich & Co. Tatiana, great to have you on the program. Now, if we just leave what's happening in today's market to one side, do you see any buy signals out there in equities in Europe and the US?
I would say for equities, we're a little bit cautious, and it's probably somewhat of a roller coaster. So near term, we know that the economic data may be slowing down. We have some ISM data, the Scholz data. So all those will be very closely watched. There is, to the extent that we are expecting some slowdown, and the recovery that we have seen in the equity market since October would indicate that there could be some more volatility ahead of us. So we are not that confident around the equity market. For us, what is sort of what we do on a day-to-day with regards to credit also, which sort of spills over into this, is we are not that keen on taking more recession risk. So going up more the quality, and also still a bit concerned about duration. And that is because we don't think that the central banks would pivot as quickly as the market is anticipating. So still volatility ahead for us, I think.
And yet the strongest start for Treasury since 2001. We're seeing that rally continue today, not just Treasuries, but also European sovereigns as well. On the back of that softer CPI print out of France, is there not a temptation to at least dip the toe when it comes to sovereign at this point?
Again, it depends very much on where you are, and so the longer end, yes, has rallied over the last few days with the CPI data out of Germany and now out of France today, and that is softening. It's still incredibly high, so I think that is really what we are focusing on more, and can that be sustained? So to the extent that we are of the opinion that maybe short-term rates are going up a bit higher than what the market is anticipating. And yes, there could be a continued inversion of the curve, but there's also then a parallel shift higher. So that is something that we are worried about, that the inversion may continue because of the recession risk further out, but more near-term, that the short end is dragged higher, and with it is dragging the longer end higher too. So again, we expect it to be a market of volatility.
Yeah, and so I think you're also expecting a lot more volatility. What is the entry point? Are you expecting a data point, or how do you know it's the right time to get in aggressively?
To get in aggressively, I think there is actually now other ways to play it. So you don't need to bet on duration to have decent returns. And that is because, and again, because of the inversion of the curve, you actually get the best carry in the short end. So you get a really decent carry without having to take duration risk. And so if you are happy with a mid-single-digit return with little volatility, rather than aiming for maybe an 8-9% return, but with much more volatility, that you say you may be giving up 2 or 3%, but then at the same time you don't have to worry and you don't have the swings on a daily basis, then there is really a lot to be had in the short end. And that's really what we are aiming for, where we say we get paid for waiting. And that's very different to what we have seen previously. This has only been the case over the last 6 months.
Short-dated investment grade, it became something of a consensus call amongst our guests towards the end of last year. Do you still see opportunity there? And if so, what within investment grade is still looking attractive?
Yeah, short-term, it's just such a no-brainer because the carry is so attractive, especially European investment grade looks particularly attractive. We're not worried about recession risk there. There's not going to be any defaults. They have good cash flow. They have good liquidity. So that is sort of the obvious choice to be. And then within it, we like banks, we like senior bank paper, we like tier 2, we like airlines, we like autos. So all those names that have a particularly sort of good yield above the Bund or above the Treasury, that's really where we see most value.
Tatjana, thanks so much. Tatjana Grell-Castro, their portfolio manager and co-head of public markets at Munich, stays with us. Now, coming up, China announces a range of measures to help its slowing economy, including aid for too big to fail property developers. We'll have plenty more on that story next. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
It's the first jobs report of the new year.
The labor market has not cracked.
A lot of that's a function of labor shortages.
This Friday, Tom, Jonathan, Lisa, and Mike will bring you crucial data and expert analysis at terminal speed.
Can you walk us through how the Federal Reserve conversation has reset?
We're still seeing a strong economy, so the Fed has to do more.
Why are people so confident that there is going to be some massive deceleration?
I just don't see the evidence. This could go a lot of different ways.
The December Jobs Report, Friday on Bloomberg Television and Radio.
Welcome back to the Open. We are 13 minutes into your European trading day. A flurry of news coming through from China, most of it market positive. We look ahead to the FOMC minutes later today, and then, of course, non-farm payrolls on Friday. The markets here in Europe currently gaining 0.6%. Very solid session over in France. The CAC up 0.9%. But you've also got a bid for treasuries once again. Yields were down 13 basis points on the benchmark 10-year yesterday. Now at 367. 367. It's a further move lower by 6 basis points on the US 10-year. But you're also seeing a bid for European sovereign debt as well. CPI, inflation out of France, came in softer than expected, and oil is selling off. Brent at $80 a barrel, down 1.7%, $75 a barrel for WTI. Quick check of the markets there. Let's bring back our guest, Tatiana Grill-Castro, portfolio manager and co-head of public markets at Muzinich, still with us. Tatiana, thanks for sticking around and for your patience. I touched on China there, and we have had a flurry of news lines, whether it's on technology, on real estate, COVID, of course, and the COVID zero policy continues to be unwound in China. Are we at a pivot point for this country?
Finally, right? I mean, this is what we have been calling for. The market has been expecting for a long time, especially when it comes to developers. So they have been suffering for 2 years. Many investors expected that the government would step in much sooner to slow down sort of this turmoil that they've caused with the 3 red lines. So it has taken actually quite a long time. There was a lot of cleansing that the developers had to go through, and so yes, it is a positive sign that we are now finally seeing the authorities to step in and offer some support. And will there be continued confusion sometimes of the long-term policy that China is pursuing? So for investors that may be a little bit uncomfortable, but given valuations and given sort of the turn by authorities, it's definitely a positive sign for China.
So Tatiana, how do you play China?
So for us, we are looking at, what is available. So there is actually another thing that I think is important to notice, that we are, as a foreigner, you're quite restricted in what you can own because of the sanctions. So there's still a number of sanctioned names that were sanctioned in 2019, back in under the Trump government, and those sanctions have never been lifted. So there is actually a far narrower pool now that investors can invest in, or most investors can invest in. And then there we are looking oftentimes at other sovereign owned entities that are not sanctioned. So they offer decent value. But again, over the last few years, Chinese companies actually are not coming to the bond market so much anymore. And that is part of it is because clearly of the sanctions, so that they don't want to be beholden to foreigners, and so they don't want to come to the dollar markets to raise debt. And to some extent also, because I think the government is also not very supportive of tapping the foreign bond market. So that market has shrunk significantly for foreign investors over the last 3 or 4 years.
All right, Tatiana, thank you so much for all of your insight today. Tatiana Grill-Castro, portfolio manager and co-head of public markets at Muzinich. Now, Bloomberg also understands that China is considering steps to support some of its too-big-to-fail developers. That's one of the conversations we were just having with Tatiana. That's as the ongoing property downturn has led to a liquidity crunch. Now, aid could include equity financing and loans, enabling a creation of real estate investment trusts and driving acquisitions. Separately, officials are also said to be discussing easing a ban on Australian coal as relations improve between the two countries. Now, for more, we're joined by Bloomberg's Lulu Chen in Hong Kong. Lulu, good morning. So what exactly is prompting the move to support developers, and how important is the timing of this?
Yeah, the number of positive headlines coming out of China today is lighting up like a Christmas tree. And I think you can take the sweeping basket of measures together with the policies that came out in November last year and interpret it as a bigger support from the government's part to aid its ailing property sector, especially since that downturn has not improved in December. Housing sales continue to drop and actually accelerated last month. The latest policies today we're seeing, one is improving the balance sheets of systemically important companies that have no unqualified auditor's opinion. And then also another policy is that the Chinese Securities Regulatory Commission, they have the AMAC, which they oversee, has once again resumed approvals of private equity funds for residential property development.
And then there's the geopolitics, Lulu Chen. We've heard the warm words from the new Chinese foreign ministry when it comes to his interpretations, his views of the United States. We, of course, expecting the Secretary of State to visit China later this year. And on Australia, the relationship, it seems, between Canberra and Beijing is improving around coal in particular. What's driving that change?
The imports are definitely a result of improving relationships between China and Australia. I also think it's part of a strategic hedging on China's part to ensure its energy sustainability and security. For Australia, it's always been a strong exporter of coal, but China coming back into the foray will definitely push up prices.
Lulu, thank you so much. Lulu Chen there with the very latest, of course, on China. We continue following China. And then, Tom, one of the articles that I read really were quite enjoyable to read is actually Don Authors going through some of the many questions that we have and investors will have on China over the next 12 months.
Yeah, it's really intriguing, just what's come out just in the last 24 hours and whether indeed this does signal more of a fundamental shift. And I think the geopolitics is fascinating as well. So a lot to watch when it comes to that economy and the policy making. Now, coming up, talking of policy making, slow down or showdown, both really, on Capitol Hill, US Republican Kevin McCarthy, he has failed to win a majority in 3 rounds of voting for Speaker of the House. It's pretty historic. More on that story next. Stay with us. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
No one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority. Information you want, analysis you trust, everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg.
recession is pretty likely just because of what the Fed has to do. But what's different this time, I think, is that if we have a recession, it's going to be a Fed-induced recession. And the Fed can end the recession by subsequently easing monetary policy. The challenge for them is to not ease too soon.
Well, that was Bloomberg opinion columnist and former New York Fed President Bill Dudley discussing his recession forecast for the U.S. It's a big day for the U.S. because we get the minutes, of course, from the Federal Reserve, and people and investors and market participants will really want to try and understand why the Fed is continuing to forecast that there will be higher inflation for longer. In the past, Jay Powell has said this is because of a strong labor force. Let's see if this is confirmed today. Now let's get straight to the Bloomberg Business Flash with Laura Wright. Hi, Laura.
Hi, Francine. FTX founder Sam Bankman-Fried has pleaded not guilty to criminal charges and will face trial in October. The 30-year-old is accused of illegally diverting massive sums of customer money from the cryptocurrency exchange to make lavish real estate purchases and risky trades. The EU is moving towards a requirement for masks and pre-flight COVID testing on travellers from China. A Commission spokesman says a strong majority of countries back tests, which would go beyond what EU health authorities recommended last week. Any change will need to be approved by EU ambassadors who meet later today. Bloomberg has learned that Chinese bureaucrats are discussing plans to resume some imports of Australian coal. The potential move comes after a ban of more than 2 years as relations improve between the nations. China implemented an unofficial pause on imports in late 2020 as hostilities between Canberra and Beijing escalated, particularly over calls for an independent probe into the coronavirus. Chinese regulators have approved a plan by Jack Ma's Ant Group to raise $1.5 billion for its consumer unit. The green light is a sign of progress in the fintech firm's government-ordered overhaul, which will leave Ant controlling half of its shares after the deal. The University of California is investing $4 billion in the massive Blackstone Real Estate Income Trust. The fund has faced high redemptions in recent months and been forced to limit withdrawals. Blackstone sweetened the deal by earmarking a $1 billion backstop to help the university get a minimum annualized return of 11.25%. That's the Bloomberg Business Flash. Tom, Francine.
Laura Wright here in London. Thank you very much indeed. Picking up on one of Laura's stories then around Tencent. So Tencent rallying, and that has had a read across for Prosus, which of course has about a 30%, almost 30% stake in the Chinese tech company, of course. And as Laura was saying, it has gained regulatory approval, Tencent, for this capital raise. That has broadly lifted Chinese tech. Prosus gaining on the back of that, given its significant stake in Tencent. As you can see, Ryanair just continuing in terms of the progress around travel. They saw an uptick in terms of loads over December. Year on year, they saw a 20% increase. Telecom Italia, this is reporting locally in Italy that maybe CDP and Macquarie may bid for Telecom Italia's network. Again, according to reports, the stock gaining, of course, on the back of that. This company under pressure to deal with a 33 billion euro debt part, Francine.
Now, always a good idea to check the price of oil. First of all, we had a UBS note this morning say that oil will be the best performing energy commodity of the year. What we're seeing, if you look a little bit deeper of what we're seeing today. Now, yesterday, remember, WTI was at around 76. Now it's really below that. It's sunk quite a lot, and it's been a rough start to the year. It does seem to be worsening as there's deteriorating outlook coming to the force, really because of predictions of a U.S. recession and China's near-term struggle with COVID-19, but also milder winter weather. So that helps, I guess, a lot of central banks, including the Fed and the ECB, putting pressure on WTI and Brent. Now, coming up, China set to pause its massive investments aimed at building a chip industry to compete with the U.S. as a COVID resurgence threatens the economy. We'll have a full story on that next. This is Bloomberg. trying to name a couple of your babies. I don't know if I'm asking you to choose amongst your children, but some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city. It's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It is the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to the Open, everyone. 30 minutes into the European trading day. Here are your top stories. Risk on, risk off. Europe opens higher after Hong Kong shares lead gains in Asia. Now, traders await today's FOMC minutes as former Fed official Bill Dudley says a U.S. recession is pretty likely. Hitting pause, China is said to be moving away from massive spending on semiconductors as the resurgence of COVID strains the nation's finances. Plus, Kevin McCarthy loses 3 rounds of voting to become U.S. Speaker of the House, foreshadowing deepening legislative gridlock in Washington. Now, Tom, I mean, there's so much news that we need to get through, but actually, if you're looking at the markets, they're kind of on a high today.
Yes, risk on, and you're seeing that reflected in the bond markets, you're seeing it reflected in currencies, the Bloomberg dollar index is lower, and of course, in equities. And despite the fact that you saw the likes of Tesla, Apple down yesterday, the US session ending in the red, the optimism is there. The questions may be around inflation as to whether we're seeing more convincing evidence that inflation is turning. You started to see that print out of Germany yesterday, softer than expected, and then the French CPI coming through, and that came in lower than expected, and that gave a boost to sovereign bonds as well. And then the flurry of China news, the catalysts from China, not just on COVID-0, but in terms of technology, in terms of the real estate sector, and on geopolitics as well. And to what extent is this a pivot that we're seeing within China? The gains of 0.9% across the benchmark, over in Germany, 170 points higher. The FTSE 100, the least strongly performing out of the major indexes, gaining 0.2%. Let's switch it over, see how things are playing out across these sectors then. Every single sector in the green in the session yesterday at this time of the day. Today, just 2 sectors in the red, energy, and we've been talking about the fact that oil has plummeted again. WTI was down a little over 4% yesterday, and that sell-off continues again today on recession concerns, on the immediate concerns about China grappling with COVID. Whether there's going to be a response from OPEC Plus, of course, will be key in the weeks ahead. And basic resources also led by 0.5%. Everything else in the green led by consumer products, food and beverage as well, up 1.6%. That's a check across your sectors at 8:30 this Wednesday morning. Francine.
Now, Bloomberg, Tom, has learned that China is pausing massive investments aimed at building a chip industry to compete with the U.S. Now, this comes as COVID resurgence threatens the economy. For more on all this, let's talk to Bloomberg's Edwin Chang in Hong Kong. So, Edwin, good morning. What does this actually mean for China's chip ambitions, and does it suggest a fundamental shift in approach?
I think what we're witnessing right now is a rethink that's been underway perhaps over the past year on China's old approach of trying to stimulate its chip industry. I think senior leadership in Beijing has come to the conclusion that just throwing money at the problem doesn't necessarily guarantee any results. And in the current environment, when China is running a record fiscal deficit and spending hand over fist to fight COVID nationwide. I think chip spending was one of the areas that came up for review. In terms of the longer-term fundamental ambitions, that remains unchanged. China knows it needs a viable chip industry, essentially to counter what it calls U.S. hegemony, American dominance of a vast plethora of technological spheres. But I think for now, they're considering ways to do it perhaps a little more efficiently, perhaps brainstorming alternatives to their approach in the past.
Yeah, this latest chapter then in the great power competition around semiconductors. Bloomberg's Edwin Chan on the differing approach there, at least the debate within Beijing as to how to support the chip industry domestically. Thank you. Let's stay with the China story then. Beijing said to be weighing new measures to shore up its so-called too-big-to-fail developers as the property downturn persists, and we saw the property sales falling once again last month. For more on this and the broader EM story, the analysis and the deep dive when it comes to money flows, let's bring in David Lubin, Head of Emerging Markets Economics at Citi. David, good morning. Thank you for joining us. Many of us were wrong-footed, many China watchers were wrong-footed on the decision by Xi Jinping to scrap COVID-0 in early December. Is there a risk that investors are going to be caught flat-footed again around the changes we're seeing in technology, real estate, and geopolitics as well? I'm thinking Australia, but also the US.
Yes, for sure. It was an extremely surprising, certainly to me, reopening. I think the danger now is that investors, market participants get overexcited about the impact that a China reopening might have on the rest of the world. People are used to thinking that, Chinese stimulus or an acceleration in Chinese economic activity is good for Europe, is good for emerging markets, is good for the rest of Asia. That will be true again because of the reopening this time. But there's an aspect to China's reopening in 2023 which limits the benefits to other countries, namely that China's reopening will deliver the biggest benefits to the services sector in China. And, it's great for the Chinese economy if more people go to restaurants, more people go to cinemas and gyms and theme parks. But that kind of increase, that boost to services spending in China doesn't really do much for the rest of the world. Services aren't really imported. Yeah. And so that, I think there's a risk that people get overexcited by the prospect of 5.5% growth, or in Citi's case, 5.3% growth this year. But 5.3% growth in 2023 in China won't feel as good for the rest of the world as it used to.
But so, David, what kind of growth will you see also between, the big metropolises, the big cities, and rural China?
Well, in a way, the link between the coast and rural China in the short term is most interesting from the point of view of the spread of COVID, to the extent that lots of people are going to be going into the countryside for the first time in 3 years without mobility restrictions in place. To places where healthcare facilities and the availability of drugs is poor. I think the short-term problem is going to be the spread of COVID. But in the cities, at least, there seems to be plenty of evidence of mobility. Right. There's traffic jams, there's people on the subways, there are lots of evidence that, people are resuming normal life. And so, there is reason for optimism about Chinese growth. It's just a different kind of Chinese growth. The other sort of international implication that I think is worth bearing in mind is a kind of balance of payments implication. With the ending of mobility restrictions, of course, there's going to be plenty of Chinese tourists going abroad, and that's great news for Japan and Korea and Thailand and others. But we know that in the past, there's been some kind of association between tourists leaving China and capital leaving China. And the problem is that in the last 3 years, Chinese households have had no ability to diversify their wealth internationally. And during this period, the property market is not a reliable store of wealth. The equity market is a volatile store of wealth. And in the last year or so, the China-US interest rate differential has become massively against the favor of Chinese households. And so while capital controls were tightened in early 2017. Yep. I think one concern might be that there might be a new link between tourists going abroad and capital moving abroad, with possible negative consequences of the renminbi and therefore risk. And
that's an interesting dynamic. The paperwork itself around the capital controls is laborious.
Yes.
When it comes to the links to commodity-producing emerging markets, whether that's oil from Indonesia or copper from Chile, Brazil and iron ore. given your views on the change in terms of the dynamics, the economic dynamics, this is going to be services-led growth. What are the implications for commodity-producing emerging markets?
Not that fantastic. Not only because the character of the Chinese recovery is going to be more services-driven, but also because there are plenty of other countries in the world that will be facing recession or close to recession, and so the demand environment is not that great, notwithstanding the recovery in China.
What is the one thing that you worry about China, David, that is not priced into the markets? I mean, today we had a lot of good news. I think Lulu Chen put it beautifully. It's like we have, better news that lights up like a Christmas tree. What could go wrong?
Well, I guess the most obvious thing that could go wrong is that the spread of COVID, reimposes not mandated restrictions on mobility, but self-imposed restrictions on mobility if Chinese households are nervous about getting sick, particularly if new variants with more pathogenic implications come about. I think that's probably the biggest risk. But from the point of view of the rest of the world, I think the most important things to bear in mind, or the most important risks to bear in mind, is first of all that a recovery of the Chinese economy in 2023 might not feel the same as it used to, and secondly, this kind of balance of payments consequences, and therefore the possibility that the renminbi might underperform.
But before we let you go, David, I want to get a quick one on Brazil. And assets there have fallen in the last couple of days, the start of the new year. Lula, concerns there about the capital account, concerns about maybe an inflation surge as he ramps up spending. How legitimate are those concerns? Is this a knee-jerk reaction from markets, or is a longer issue around Brazil as an investment destination under Lula?
Yeah. In the last few weeks, there's been, I guess, 3 reasons why emerging markets investors have had cause to get anxious about fixed income markets in various countries. One is, a situation where in a country like Hungary or Chile, you have a big balance of payments deficit, and that, creates volatility in the currency and uncertainty about the direction of interest rates. The second is, in a case like South Africa late last year, when there were kind of concerns about political stability. And the third, in the case of Brazil, is where market participants have valid concerns about fiscal dynamics, public finance dynamics. And I think it'll be difficult for market participants to kind of forget about their concerns about Brazilian fiscal policy, because it's only going to be sometime in the second quarter that we really get to see the new government's fiscal plans. And so this kind of anxiety that seems to be lurking in the market about Brazilian public finances may be with us for some time.
David, thank you so much. David Lubin there, head of emerging markets economics at Citi. Now, coming up, showdown on Capitol Hill. U.S. Republican Kevin McCarthy fails to win a majority in 3 rounds of voting for Speaker of the House. More on that story later on in the program. This is Bloomberg.
Is as safe as it was when you were in the government? It's not as safe as it was. Crime is clearly rising. I mean, it's not back to the dark old days of, pre-Giuliani in the early 90s. But we got to be careful, because safety is the foundation of everything. And so I know the current mayor is committed to reducing crime, but we're going to have to be incredibly aggressive in making sure that crime does not increase.
Are you involved any longer in New York City matters, or your advisor?
Yeah, the mayor and governor actually asked me to co-chair a panel or a task force on reviving the commercial districts throughout the city. So I've been in the middle of that.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the Open. 44 minutes into the European trading day. It is risk on across these markets. Gains of 0.9% across the European benchmark. Futures in the US also pointing higher by between 0.5 on the S&P E-minis. Nasdaq futures up 0.8%.
Now, the U.S. House of Representatives abruptly adjourned Tuesday without electing a new speaker. That's as Republican leader Kevin McCarthy failed to win a majority in 3 rounds of voting amid a rebellion by a small group of GOP hardliners. Well, joining us now is Ross Matheson, Bloomberg's senior executive editor for government. Ross, thank you so much for joining us. I mean, first of all, we haven't seen this in like 100 years. So what does it tell us about the state of the Republican Party right now?
Well, that's right. It's pretty amazing to see like 3 votes yesterday and still unable to get through. And now the House is adjourned. So this could go on for some days yet. So we haven't been in this place for a very long time. What should have been pretty automatic almost for McCarthy, he'd even moved into the Speaker's office already just to get the nod. So what it tells us is that we're looking at extremely dysfunctional Congress going through to the 2024 election. What you've got is Republicans fighting with each other, certainly fringe far-right parts of the Republican Party saying they're going to be obstructionist all the way through. And of course, Republicans only have a very small majority in Congress to start with. So what we're going to see is possible true gridlock. And that's also not good news either for the Democrats and for Joe Biden's White House in the final 2 years of his term.
And that's really the importance of this story, isn't it? It's the indication, what it tells us about political wrangling in the 12 months, 2 years ahead. What does the Freedom Caucus, what is it and what does it want?
Well, obviously, it's the far extreme right, rather, of the Republican Party. So you've got people who are very populist, supporters of Donald Trump, and so on. And what they're asking for is a bunch of stuff. They want seats on certain key committees, to which McCarthy has said no. Particularly what they want is some kind of boundaries around spending by the government that will be guaranteed all the way through. And of course, that's something that as Speaker, you cannot box yourself in and agree to do, because we've got debt ceilings that be coming up again. And instead of being a seasonal problem, perhaps this will be a true crisis for the US government, if not. So what you can see is that they want rules around spending, which he can't give. They want seats on committees that he won't agree to. And they want even like agreement on term limits for Congress people, which of course he also will not agree to. But you can see these demands will keep coming up now, obviously across the next 2 years.
So what does it tell us about who's in charge of the Republican Party, if at all? I mean, I know, is there the hand of Donald Trump in this, or is it just that it's a very splintered and fractured party?
Well, that's sort of the existential question in a way. How much is what Donald Trump did as president still resonating through the Republican Party through his direct hand? Or is it simply that he set off a process now that is sort of self-fulfilling and these other Republicans are now running with it? Will be interesting to see as we get closer to 2024 is how directly involved Donald Trump becomes, or another Republican contender, perhaps Ron DeSantis. And do you see further splintering of the Republican Party as a result, particularly when it comes to congressional decisions?
Really, really fascinating and historic, as you said, around the political machinations within the Republican Party as they fight for the leader of the House stateside. Thank you, Bloomberg's Rosalind Matheson. Now, to a story that is also unfolding in the US. Of course, FTX founder Sam Bankman-Fried has pleaded not guilty to criminal charges and is set to face trial in October of this year. Bloomberg's Shonali Basak sent this update from the courthouse in Manhattan.
Sam Bankman-Fried, the founder of the FTX empire, appeared at the Southern District of New York at a Manhattan court in downtown New York City to plead not guilty to 8 criminal counts that included wire fraud. Now remember, Sam Bankman-Fried has been accused of also civil charges separately by the SEC and the CFTC. But today, prosecutors have also, in addition to working with the judge to set a court date for a trial ahead, they've also sought to modify his bail terms to include restrictions when it comes to any potential access of FTX or Alameda wallets. Now, this is something Sam Bankman-Fried himself has tweeted about and said he has not done and he does not have access to, but it is something the prosecutors are separately looking into, and we'll have more details in the coming days. In the coming weeks, we will also have prosecutors put forward evidence as it pertains to their charges. They will also seek to hear motions from Sam Bankman-Fried's attorneys. We will hear much more in the coming weeks, but we will also be looking forward to any changes as it pertains to a speedy trial set for October 2nd, 2023. I'm Shonali Basak in New York for Bloomberg Television.
Well, that's Bloomberg's Shonali Basak with the latest on the FTX founders court case. Now, let's also get the Bloomberg First Word News with Laura Wright. Hi, Laura.
Thanks, Francine. The EU is moving towards a requirement for masks and pre-flight COVID testing on travellers from China. A Commission spokesman says a strong majority of countries back tests, which would go beyond what EU health authorities recommended last week. Any change will need to be approved by EU ambassadors who meet later today. Bloomberg has learned that Chinese bureaucrats are discussing plans to resume some imports of Australian coal. The potential move comes after a ban of more than 2 years as relations improve between the nations. China implemented an unofficial pause on imports in late 2020 as hostilities between Canberra and Beijing escalated, particularly over calls for an independent probe into the coronavirus. Chinese regulators have approved a plan by Jack Ma's Ant Group to raise $1.5 billion for its consumer unit. The green light is a sign of progress in the fintech firm's government-ordered overhaul, which will leave Ant controlling half of its shares after the deal. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom, Francine.
Laura Wright here in London. Thank you very much indeed. Now, coming up, Bloomberg M Live's team, well, they're betting against the greenback this year, certainly playing out today. We discuss why. That is next. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to the Open, everyone. 52 minutes into the European trading day. This is a picture across the board. We're actually seeing an acceleration of gains. The European stock 600 getting some 0.9%. And Tom, it's of course all about that Fed minutes. And we try and figure out exactly what Jay Powell and everyone else in Federal Reserve board members see the underlying factor of why inflation could remain high for so much longer.
Yeah, raising the forecast for the end of this year to a little above 3% from around 2.8%. So as you say, why they see higher inflation for longer. It is risk on. You're seeing that reflected in the US dollar. The Bloomberg dollar index currently down 0.6%. And as much as 2022 was about the dollar reigning supreme, this year will be about the yen. And the yen is strengthening today. Again, the pound and the euro dominating the list of winners. That is the view of none other than Ven Ram from our Bloomberg MLive team. Good morning, Ven. Walk us through the rationale then as to what you and the team expect around G10 currencies this year.
Morning, Tom. I think last year was about the dollar reigning supreme. This year is going to be, the boot is going to be on the other foot, particularly because the currencies like the yen, the pound, and the euro are going to absorb weakness in the dollar. Why do I expect weakness in the dollar? Primarily because if inflation plays ball in the US and softens as the Fed expects it to, the Fed will stop at 5.25, which will then put a stop on how much interest rate differentials widen. And therefore, that will support the currencies, the other G10 currencies. And the yen and the pound and the euro, and to a lesser extent, the Canadian dollar, will be the bigger winners.
So why do you expect, then, for example, the pound to strengthen as much as you do?
I know it's a contrarian call. That's primarily because, everyone has factored in a recession for the UK. Yes, that's true. But I think that we'll get a shallower recession than many people in the markets think. So which is not priced in. And, the pound has surged some 17% from the lows that we saw late last year. So that is a pretty impressive and a sharp rally. And that rally has come at a time, even when investors have known all along that the UK is headed for a recession. And therefore, that suggests something. And that something is that the pound is behaving like a euro derivative rather than playing off on other factors. And that is what is going to be the driver going forward as well.
120 on sterling, a gain of 0.8% in the session. Let's switch focus to the Eurozone then. We had that inflation print out of France earlier this morning, Ven Ram, softer than expected. And I think we're getting a chart together that shows the trajectory now of inflation. It is coming off across the Eurozone. We had the German data out yesterday. Good news for the ECB, arguably. Does that not undermine your case for stronger euro?
I don't think it does, Tom, for the simple reason. What we got from Germany yesterday was reflective of the one-off energy support measures from the government, likewise in France. And it is important to see those numbers against the ECB's own forecast. The ECB's own forecast is 6.3% for this year. And the German headline inflation, despite that energy support, is a lot higher than the ECB would like. And therefore, the markets are pricing in 150 basis points more of hikes. And we heard from the ECB speakers yesterday that they're going to go hammer and tongs again in February and March. And therefore, I do think that they will get to 350. And that's a lot more emphatic than what the Fed is going to do this year. And therefore, the euro will be bid eventually.
Ven, thank you so much. As always, Ven Ram there from our Bloomberg MLive team. That's it for the European Market Open. Surveillance Early Edition is up next. We'll have a full roundup, of course, of market action. We'll also look at oil, because with the oil under pressure, I think it was below $76 for WTI. It could invite attention from OPEC suppliers as they contemplate a state budget. This is Bloomberg.
crucially important. And I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
They've raised their inflation forecast.
Firm and immediate action.
He wants to destroy my country.
Elon Musk to buy Twitter.
Overturned Roe versus Wade.
Boris Johnson will call it
Donald
quits.
Trump's plan to overturn the
unprecedented search warrant at the home of our former president.
Queen Elizabeth has died.
Xi Jinping got his third consecutive term.
The pound falls to an all-time low.
The shortest ever serving prime minister.
Presidents Biden and Xi shake hands.
FTX filed for bankruptcy.
The red wave that never was.
Protesting his zero COVID policy.
Information you want, analysis you trust. Everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions. This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Risk on, Europe extends gains after Hong Kong shares led gains in Asia. Traders await today's Fed minutes as former Fed official Bill Dudley says a U.S. recession is pretty likely. Now, chips down, China is said to be moving away from massive spending on semiconductors as a resurgence of COVID strains the nation's finances. Plus, Kevin McCarthy loses 3 rounds of voting to become U.S. Speaker of the House, foreshadowing deepening legislative gridlock in Washington. Now, first thing is first, so let's check in on the markets. A lot of focus, of course, is what's happening in China. That's giving a nice little boost to certain sectors here in Europe. European stocks gaining some 0.8%. It's also boosting some of the S&P futures over in the U.S. Look at what's that doing to the U.S. 10-year yield, although I would look at political gridlock and try to see whether there's longer-term market implication in the U.S. 3.6958 is that yield on the 10-year. And then the other big question, of course, is what happens to oil. Yesterday, WTI was down 4%. Today, it's continuing when it's moved downwards, 75.22. This is because of a number of factors, including the risk of a U.S. recession. The question is, what does it mean for OPEC Plus, especially for Riyadh? As at the beginning of the year, they usually try and balance the budget and see what happens in the next 12 months. Now, European stocks so far had a strong start to the year, signaling a growing risk appetite amongst investors. So joining us now to talk about the future, what a treat for January the 4th is Bloomberg's Markets Live editor, managing editor, Mark Cudmore and Mike Bell, JP Morgan Asset Management, a global market strategist. So thank you both for joining us. Mark, you've had some great calls over the last 12 months. What do you think will go wrong and what do you think will go right in the next 6 months?
Well, there'll be a lot that will go wrong. That's what I'm going to assume is going to be the case. I kind of make every conviction quite humbly made. I think there's probably 2 big risks. I think, first of all, last year everyone was obsessed by inflation, but this year the bigger call that's going to matter more is growth. I think it's pretty much consensus that inflation is going to come lower, so it's more about how much it collapses or whether it kind of comes lower at too high a level. Well, then that'll be more of a growth call. So when I'm looking to where I'm going to be most wrong in 2023, it's on the growth call. What's my base case? My base case is the U.S. goes into a recession in the second quarter and it ends out being deeper and more prolonged than is priced.
Mike, before I go to Mike, thank you for that, Mark. We're just getting some Euro area PMI. This is services for the month of December. That PMI 49.8. It's actually better than expected, or better than the preliminary 49.1, but anything below 50, of course, is still a contraction. So, Mike, what do you think could go right for the Euro area in 2023?
I think for European stocks, the key thing is they go into this year having been pretty beaten up in 2022, which is the case actually when you look pretty much around the world. So I think the sort of positive start we're seeing for 2023 is that markets know the bad news is coming in terms of the economy, price that in 2022, and are now starting to look ahead and say, well, actually, what's 2024 going to look like? We're going to have a recession in 2023. 2024 might be the year of recovery, and start to price that in 2023.
So, Mike, what is the biggest, if there's anything that you do with conviction, and I know we're expecting volatility, Mike Bell, but is there something that you'd be buying right now in the expectation that, other parts of the markets haven't latched onto it yet?
I think the US banks look pretty attractive. They're down about 30% in 2022. So to me, that suggests that they know there's some economic hit coming for the economy. But I don't think it's going to be that bad. I don't think we're going to see a financial crisis. About 95% of Americans are on long-term fixed-rate mortgages now. So it's not going to be like it was in 2008, where higher interest rates caused a mass wave of false sellers. There's far fewer subprime mortgage borrowers. The banks are much better capitalized. So I don't think you're going to get a financial crisis. And with banks down 30%, that looks pretty attractive, I think.
Mark Cudmore, if you hear me, because I know we're having a couple of technical difficulties, but if you can hear me, what is I don't know whether there's an entry point, and we're seeing a couple of calls from some of the big Wall Street banks, like entry points, for example, in the S&P. But is there a data point that you're waiting for to say, like, actually, this is a buy signal?
That's a great question, Francine, and I can hear you well now. The god on my ear has disappeared, thankfully, for the last time it was distracting me. I think when you talk about what the entry point is, it's really about your call about how low US stocks will go. So if you're very bullish, you kind of think, you know what, no point waiting, let's get in now. I am in the camp that US stocks will break their 2022 lows. I expect that to happen around the second quarter of this year, but obviously that timeline will continue to change. I'm very open anytime in the first 6 months, maybe even the first 9 months. I think that once we get down to that towards 3,300 level, that kind of thing, we price in a bit more of a recession a bit more seriously, then you're going to have to assess how quickly the Fed will react. My base case narrative is that the Fed won't be as quick to cut as the market thinks, even as inflation is coming down, even as recession is coming, because this is a Fed-engineered recession. So they want to see growth slow down rather than panicking. So as for the entry points, I think it will be, like everyone is kind of saying, when the Fed starts really panicking about the markets and saying that, hey, no, wait, we want to ease our way back out of this. We want to re-stimulate animal spirits. I just think that entry point is going to come later than much of the market, and that's why I think US stocks make a new low in the first half of this year.
Mike, how hard, Mike Bell, is it at this point, given what Mark's beliefs are, to say, look, this is the right time to get into US equities?
The precise timing is always hard, but we did a fascinating study. We looked back to the post-war period and looked at every time the S&P 500 was down 25%. How often were you higher a year later? And there were only 2 occasions when you weren't higher a year later. So we went down 25% by the end of September last year. And so the vast majority of the time, 12 months after that, stock markets have been higher. So look, it may be some of those times you did go a bit lower before you ended up higher a year later. But if you've got a 12-month horizon, we think that it's a pretty attractive time to be owning stocks.
Mike Bell, I have a viewer question. So thank you, first of all. Happy New Year to all of our viewers and listeners, and keep on sending those questions. Mike Bell, this person's writing in saying, look, if the threat of Putin was to disappear tomorrow, what is the first EU sector that you would buy?
Probably industrials or the banks, the sort of deep cyclical value stocks in Europe.
Mark, I don't know whether there is a belief that from here, one of the biggest equation is energy. And I know that this was a tough question, but again, is there something, have we gotten used to the fact that this war could go on for a long time? Like, what does it mean for the markets if there was some kind of resolution or escalation?
I think if, as Mike says, if there was a sudden resolution, and that's obviously quite a big if, then I think you've got to be buying these cyclicals. And European stocks are generally discounted, and I think there is major upside there. You've also got to look at those countries that have been most squeezed by the energy crisis. And I think, Germany might be a good name where there's still a risk premium for what happened around their energy infrastructure. So I think the DAX might be a good story there. And they have a lot of those cyclicals, again, exposed to the positive China story. So I think that might be a good one. If there's an escalation, you've both got a worry about proximity, about generally the distance. So I think, again, Germany might be most vulnerable, some of those ones in this eastern count. And you've also got those ones that are most going to be squeezed by another spike up in energy. Because, remember, the structural energy crisis in Europe is not resolved. The short-term one of this winter, we appear to be getting through this winter, okay? The short-term energy crisis, we're getting through the worst of it. The structural one is not resolved, and those countries that are at the forefront of that will remain vulnerable to any escalation.
Mike Bell, how do you play China right now? So China is resuming this residential real estate funds. It's trying to support the economy. Again, is it a good time, or how do you play the Chinese markets in 2023?
We're pretty bullish on China. I mean, I think it's fascinating that if you look at the return we've seen since the end of October, Chinese stocks are up about 35% or so, but they're still down 50% from where they were at the peak back in 2021. So there's still a lot of bad news priced into China. Obviously, they've gone up a little bit on this hope that China's going to be able to move past zero COVID, and there may be some bumps on the road there. But ultimately, we do think by the end of 2023, China's no longer going to be worrying about COVID, and that's pretty bullish for Chinese stocks that are still down 50% from the peak.
All right, thank you both for joining us. Mark Cudmore there, of course, from our Bloomberg MLive team. He manages it. And Mike Bell, JP Morgan Asset Management Global Market Strategist, joining us this morning. Now, coming up, China announces a range of measures to help its slowing economy, including aid for too big to fail property developers. We'll have plenty more on that story from the ground next. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Bloomberg has learned that China is considering steps to further support some of its too-big-to-fail developers. That's as the ongoing property downturn has led to a liquidity crunch. Now, the aid could include equity financing and loans, enabling creation of real estate investment trusts and driving acquisitions. Well, joining us now is Lulu Chen, Bloomberg's investing and real estate team leader in Hong Kong. Lulu, good morning. What's prompting the move to actually support developers?
Well, China wants to avoid a disorderly collapse of the property market that could spill into a larger financial contagion crisis. You can see the November sweeping basket of policy supports as a tone-setting milestone. Back then, China issued a 16-point measure support plan, and today we're seeing more implementations of policy support, including what we've just reported that the Financial Stability Board has urged banking and securities regulators to help improve the balance sheet of systemically important banks, provided that they don't have any auditing issues. And then the other part where they resumed approval of PE funds for residential property developers.
So meanwhile, Lulu, Chinese officials are also discussing easing a ban on Australian coal. So what's driving that change?
I think that's the result of improving relationships between China and Australia. Also, China's foreign ministry, the overall stance has softened ever since China's leadership change. The other important aspect to consider is China's desire to secure its energy. So importing Australia coal would help secure that.
So, I mean, there's so many stories, and I know you've also been working, for example, on something with, and in some of the big companies to really try and figure out what happens to them in the next 12 months. What do you think will be the most significant change for Chinese companies?
Yeah, when you put all the pieces together, you're starting to see a pattern. And I think for this week, the number of positive stories coming out of China just paints a picture where policy regulators are finally softening their stance and ready to refocus on the economy. The improvements for the tech sector and also property sector all play into that.
Thank you so much. Of course, Bloomberg's Asia Investing and Real Estate team leader, Lulu Chen, there on the various big news coming out of China. Now, coming up, UK food inflation jumps to historic levels, but wider store prices rises moderated. We'll discuss the prospects for the UK economy next. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Now, the British Retail Consortium says food inflation has accelerated strongly to a record high last month, with retailers warning of another year of elevated prices. Now, for more, we're joined by Bloomberg's Lizzie Burden. Lizzie, if you break down the data for us, I mean, it's an ugly picture for 2023.
It really is. The British Retail Consortium says food prices rose 13% in December. And we also had data from Kantar this morning showing that £12 billion was spent on groceries in December. That's the first time ever this has happened. And what it is, it's not people buying more, they're spending more because of inflation. And if you take the case of the lowly mince pie, 19% more was bought in terms of mince pie sales, but not in terms of volumes. They barely moved. And actually, the BRC says that prices are going to go up again in April because the government's support for energy bills is set to expire. Now, to put this into real-life context, there was a really fascinating interview in the British Medical Journal with the president of the Royal College of Paediatrics and Child Health. And she said that cases of children with rotten teeth in the UK had increased because for more families, toothbrushes are a luxury item. The quality of food that they can afford to buy has worsened. So these aren't just numbers on a spreadsheet. It has real-life consequences.
Yeah, I read, I mean, the fact that, children's toothbrushes are seen by some families as luxury items is just heartbreaking. That was one of the first things I read this morning, and we should absolutely always remember that. This means that Rishi Sunak has a lot to do, and yet he's trying, I think he's getting so much pressure from lawmakers, from his party, to actually have a positive spin, that he focuses on education instead of maybe the pressing issues.
Exactly, and he's making a speech this afternoon where he's expected to set out his vision for 2023, and curiously, his office has chosen to focus all the previews on an announcement that he's going to pledge that children in all English schools until the 18 need to learn some form of maths. Now, you might think, as you say, that this is a positive spin because education's a big priority for him. He owes his success, he says, to his education at the famous public school Winchester. It seems like he's trying to turn his political Achilles heel into an asset. But it risks looking tone deaf when you've got strikes almost every day and an NHS in crisis.
And then we also have consumer borrowing data a little bit later, so what are you expecting from that?
Yeah, that's including mortgage approvals data. It's from the Bank of England, and they're expected to fall from 59,000 in October to 53,000 in November. This is because of the inflation we've just been talking about and the higher interest rates. And the knock-on effect of that is Bloomberg Economics reckons you're going to get house prices dropping 10% this year. And the knock-on effect of all of this is for the recession that the Bank of England says we're already in. You've got 4/5 of mortgaged households in the UK on fixed rates. They're going to have to be renewed on much higher rates. People are going to get a nasty surprise, and it's going to dent demand in the economy probably, which will stoke this recession.
Okay, Lizzie, thank you so much for all of the update. We have a big news flow, of course, out of the UK today. Lizzie Burden there with the very latest on some of the UK stories we're covering. We'll also continue our coverage of all top UK stories every Thursday, 9:30 a.m. in our half-an-hour special right here on Bloomberg TV. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The EU is moving towards a requirement for masks and pre-flight COVID testing on travellers from China. A Commission spokesman says a strong majority of countries back the test, which would go beyond what EU health authorities recommended last week. Any change will need to be approved by EU ambassadors who do meet later today. Now, China is pausing massive spending aimed at building a chip industry to compete with the US. Sources tell Bloomberg that Beijing is reining in investment as a nationwide COVID surge does strain finances. Officials are said to be discussing alternative ways to assist homegrown chip makers, such as lowering the cost of semiconductor materials in a move away from costly subsidies. Now, Bloomberg has learned that Chinese bureaucrats are discussing plans to resume some imports of Australian coal. The potential move comes after a ban of more than 2 years as relations do improve between the nations. China implemented an unofficial pause on imports in late 2020 as hostilities between Canberra and Beijing did escalate, particularly over calls for an independent probe into the coronavirus. And Chinese regulators have approved a plan by Jack Ma's Ant Group to raise $1.5 billion for its consumer unit. The green light is a sign of progress in the fintech firm's government's ordered overhaul, which will leave Ant controlling half of its shares after the deal. The University of California is investing $4 billion in the massive BlackRock real estate income trust. The fund has faced higher redemptions in recent months and been forced to limit withdrawals. Blackstone sweetened the deal by earmarking a $1 billion backstop to help the university get a minimum annualized return of 11.25%. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Leanne Gerrans there with the very latest on the top news. Now, stocks actually advancing in today's trading session, so let's look at Europe, but really continuing some of the risk-on mood that we saw in Asia. Now, stocks advancing, U.S. futures also seem to be focusing on the favorable news reports from China, but also data from Europe that's boosting risk appetite. If you look at what is giving a boost here in Europe, we had this unexpected slowing of French inflation, and that seems to be adding to signs of easing price pressure in the euro area. Also, we had news that China is considering further support for property developers. That was really seen as a positive. The dollar is the big story that we need to keep an eye on, and of course what that means not only for euro dollar, but for example, some of the emerging markets that are so dependent on the price of oil. We have the Bloomberg US dollar index. We could have shown you euro dollar for the moment, 1,249. Now, separately, there's quite a lot going on with oil. It's falling further today after the biggest drop in more than a month yesterday. The question, I think, is now, what does OPEC Plus do? So we're January. A lot of the OPEC Plus countries, including Saudi Arabia, that potentially is probably the only country that could add more oil on the markets, needs to balance its books. Does it try and convene an emergency session to see what it can do? Now, coming up, third time isn't the charm for McCarthy. We discuss his failed attempt to be nominated for U.S. House Speaker. That's coming up next, and this is Bloomberg.
is as safe as it was when you were in the government?
It's not as safe as it was. Crime is clearly rising. I mean, it's not back to the dark old days of, pre-Giuliani in the early 90s. But we got to be careful because safety is the foundation of everything. And so I know the current mayor is committed to reducing crime, but we're going to have to be incredibly aggressive in making sure that crime does not increase.
Are you involved any longer in New York City matters, or your advisor?
Yeah, the mayor and governor actually asked me to co-chair a panel or a task force on reviving the commercial districts throughout the city. So I've been in the middle of that.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Risk on. European stocks and U.S. futures extend gains after China support measures and slowing French inflation drive optimism, while traders await Fed minutes as former Fed official Bill Dudley says a U.S. recession is pretty likely. Now, chips down, China is said to be moving away from massive spending on semiconductors as the resurgence of COVID strains the nation's finances. Plus, Kevin McCarthy loses 3 rounds of voting to become U.S. Speaker of the House, foreshadowing deepening legislative gridlock in Washington. Well, good morning, everyone. Welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. So, Republican leader Kevin McCarthy failed to win a majority to be House Speaker in 3 rounds of voting after a small group of GOP hardliners rebelled. That's despite McCarthy spending the last year courting Republican conservatives. Now, it's the first time in a century that the House has not elected a speaker after 1 round of balloting. Well, joining us now is Rosalind Matheson, Bloomberg's senior executive editor for government. Ros, thank you for joining us. I mean, we haven't seen this in 100 years. First of all, how unexpected was it? And what does it tell us about the state of the Republican Party?
Well, if you look back, you can see actually there's been a trajectory about McCarthy with this far-right wing of the Republican Party for a while. They think that he's been too supportive for too many years of Democrats spending in a freewheeling fashion. This is really, in essence, payback time for him. They think he got too complacent about being Speaker. In fact, he'd moved into the office before the votes were even held. And what they're saying is, hang up, no, we're going to become a bloc here, and we're going to demand our own set of things if you're going to become Speaker. And they're really staking their ground on this. So what it tells us is several things. One is that the Republican Party is incredibly fragmented, even more so than we've seen before, and possibly will become really fragmented in the run-up to the 2024 election. It also shows it's going to be a problem getting anything done in Congress in the next 2 years also, no matter who ends up being Speaker.
But does it shift the Republican Party to, more to the right?
Well, we've seen that trend for a while, of course, under the presidency of Donald Trump, who's now going to be a Republican candidate, he said, for president in 2024. And even if he doesn't succeed, you can see the after effects of his administration lingering through the Republican Party. You see increasing populism. You see Republicans who are dug in against spending, particularly when it comes to raising the debt ceiling. That will become more problematic. So what you're really seeing is a fundamental tussle in the Republican Party. Do they go the way of Donald Trump? Do they go the way of moderates? It seems increasingly unlikely they're going to stay in that kind of center ground.
So does it give us also an idea of who could be the Republican candidate for 2024?
Well, that is the real question. Of course, we don't know yet whether someone like Ron DeSantis is going to throw his hat into the ring. Of course, he is also ultra-conservative, and from that part of the Republican Party, arguably more presentable, perhaps, to voters than Donald Trump is. He's been very charismatic in Florida and successful in his policies, perhaps wrapped up in a package that can be more palatable for voters. Either way, you're probably going to see a candidate come from the right in the Republican Party in 2024.
So, Roz, the gridlock, actually, what does it mean also for Biden and what he's trying to pass through Congress?
Well, it's going to be very difficult to begin with because, of course, the Republicans have a very small majority in the House itself. It was going to be gridlock either way, but what we can expect is even more gridlock on top of gridlock, because if McCarthy doesn't have the ability to negotiate on behalf of the Republican Party as a whole and is negotiating all the time within factions of his own party, can he be an honest broker for the Democrats to get things done? If he promises the Democrats, I'll get this through with you, is there any guarantee? Yeah. So it's going to be very, very difficult for the Biden White House to get anything done in this kind of scenario.
So, Roz, I mean, zooming back, the most important event, of course, over the next 5 years is probably what's happening with in the U.S. election 24. Do you see if the Republicans go more towards a, right wing, does it mean that Democrats go more left wing?
Well, that is the challenge. You've seen tendency really as people go right is they bring others with them because, of course, you're playing for that centre vote. Yep. And that really is the sort of the core vote that needs to be secured to get the presidency in 2024. You can see that's why they wouldn't be putting up a far left candidate, for example, if Joe Biden decides not to run. It's really going to be more about the centre and the centre right.
Thank you so much, as always, Rosalind Matheson there, Bloomberg Senior Executive Editor for Government. Now, FTX founder Sam Bankman-Fried has also pleaded not guilty to criminal charges in the U.S. District Court of New York and will face trial in October. For more on all of this, we're joined by Bloomberg crypto reporter Emily Nicole. Emily, was it a surprise, actually, that Bankman-Fried, good morning, first of all, was it a surprise that Bankman-Fried entered a not guilty plea on all counts?
Good morning, Francine. So no, it wasn't a surprise. We were expecting him to enter a plea that's not guilty. But it is kind of surprising in that his colleagues pleaded guilty to their charges of fraud, both Caroline Ellison and Gary Wang. So on that front, Sam is really sticking his neck out and saying, I didn't do this. However, what this does mean is that he'll get given additional time now with his team to discover what the prosecutors might actually have against him in terms of evidence and potentially build a case off that.
So what terms, what terms did the hearing actually end on? Like, where are we?
So we now have a very, very long time to go, and there will be a trial later on this year in October. And as part of the arrangements that were agreed at the hearing, there are now several more additional bail conditions set against Sam. So he's, for example, he's not allowed to start a business. He's not allowed to make any additional transfers up to a certain amount of US dollars. And also, the judge wanted to make sure that he can't touch any assets that are to do with FTX or Alameda. So he put some additional conditions in there because, as we found out earlier last week, reported by Bloomberg, that there are prosecutors looking at certain wallets attached to Bankman-Fried and whether or not transactions have continued to be made by those wallets.
So what's the timeline, Emily, of what comes next?
So the trial will be in October. That's the date that's been set. It seems very far away to us, but that's a really long time that now the two sides have periods to discover exactly what cases they want to make. And the case could even go longer than that. Some are expecting the trial could happen even into early 2024. And until that date, we'll have a bunch of different things happening between the two sides. And obviously the bankruptcy case will continue on from there.
All right, Emily, thanks so much. As always, our crypto reporter there, Emily Nicole, joining us on the very latest with Sam Bankman-Fried. Now, we're also getting some data out of the UK. The Bloomberg terminal is giving me the data for UK November mortgage approvals. Now, it's gotten, or we were actually expecting a 53,000 approval. We actually got 46,000. I don't know whether that's having a huge impact on what we're seeing overall. For example, for sterling, we had a pretty bold call from Van Ram a little bit earlier on. He's expecting sterling to actually finish on a higher because of a number of things, and he's expecting actually for investors to come back into the UK in the next couple of months. So for the moment, that mortgage approval rating 46,075 instead of the estimated 53,000. So it's a worse number than expected. Coming up, new year, new gym membership. Well, we speak to Humphrey Cobbold, the Chief Executive Officer of Pure Gym, on whether the UK's cost of living crisis and inflation is impacting his business. That's next, and this is Bloomberg.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
No one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the UK is facing a confluence of headwinds, including a cost of living crisis, spiraling inflation, and risk of a long recession. It's hitting consumers particularly hard, painting a pretty bleak picture for discretionary spending on things like gym memberships. Now, will the sector miss out on the usual New Year spike in memberships in 2023? Well, joining us now is Humphrey Cobbold. He's Chief Executive of Pure Gym, the UK's largest gym operator. Humphrey, thank you so much for joining us. First of all, how many people are deciding to now go to the gym after maybe the month of festivities in December?
Well, yeah, good morning, Francine. Good to see you again. Look, the reality is we don't quite know yet. We sit as we stand currently with just around 1.3 million members in the UK, and we hope that we'll get several tens of thousands, indeed a couple of 100,000 joining up over the next 2 or 3 months. That's what we're hoping for, and that's what we're doing. And I do believe that British people understand the need for good health and well-being. We look after people very well in our facilities. We offer great value and a high-quality product, lots of flexibility. People don't have to sign up to a 12-month contract. So if their financial situation changes, they can alter their behavior later if they want to. And we're working very hard to serve people in that regard.
Yeah, so if you look at the next 12 months, and it will be hard, we're seeing the price of inflation, the cost of living crisis increasing. You also have quite a lot of strikes, which makes it difficult for people to get to A to B. Like, what's your biggest concern over the next 6 to 12 months?
Well, I think all of the above, Francine. We're concerned about consumer spending, and hence we've launched memberships which are lower priced, off-peak, saver memberships to allow people to have access if they can flex their time a little bit to make that more affordable. I'm concerned about travel patterns. That impacts us particularly in the UK and into central London, of course. And I'm concerned about inflation in cost as well for us, of course. And we're working very hard to mitigate the impact of those, and especially energy costs in particular.
Humphrey, I think during COVID, or certainly during lockdown, you had about 30% of your members leave. Have most of them come back? How are gym habits changing?
Yeah, about 2/3 of those are back already, and we've seen steady further progress. That progress did slow up a bit through the back end of last year. That's not entirely surprising given the highly disrupted September and October we had with all the concerns around mortgage rates and the recognition of the impact of the cost of living issues on people. But in general, people are coming back. The good news is that we're seeing higher utilization than before. People who are back are using the gyms a lot to look after their health and well-being. And we're also getting very strong net promoter scores, positive feedback from members about the quality of the product we're giving to them. So I'm hopeful, I'm an optimist for the future, but we're going to have to work hard to serve people well in the environment that we're in. There's no question about that.
So how difficult is it to find staff, and do you have to pay them more than you did last year?
We are increasing pay to staff. Of course we are. We provided further transitional relief to people last year to help with the cost of living crisis, and in particular with a focus on some of our lower paid staff. That's absolutely the right thing for businesses to be doing at the current time. And of course, it is challenging finding staff as well. I think we're well set up in that regard. We're a strong brand with good career prospects for people who join us. So thus far, we've been able to meet most of our needs on staffing, but we'll remain ever attentive on that. Our people are an incredibly important part of the proposition, and we try and look after them as well as we can under these difficult circumstances.
Humphrey, what does that mean? And you were saying, for example, some of the, there's flexibility in terms of pricing packages and things like that. What more do you have to do to I guess, adapt to this new reality, which is quite hard in the UK?
Well, we have very flexible pricing in the UK. We charge different prices for different gyms. So we can tune the pricing to the demand in any market. So if demand shifts a little bit, we can drop prices to make it more attractive for people to come in. And if demand's very strong, perhaps in a residential suburb, then we'll capture a little bit more revenue from that. And what we've done specifically is we've rolled out to pretty much all our facilities in the UK, and we'll be doing this across Europe as well in time. It's an off-peak saver membership that for 30, sometimes 40% less than the normal rolling monthly rate, people can gain access to the gym at weekends and in off-peak hours during the week. So if they can flex their schedules, they can still get access to good quality health and fitness and an opportunity to be active. We think that's a good thing to be doing in the current market.
So I know you also want to expand in the US. How's that going? And when's the right time to IPO? Do you need that buffer of being elsewhere where maybe the economy is a little bit stronger to be able to go to the markets and be a public company?
Yeah, it's an interesting question, Francine. We're in the very early stages of our expansion and, frankly, experimentation in the US. It's a very different market. So we've committed an amount of capital, but not for us a huge amount. We've got 3 really good sites in and around the Washington, D.C. area where we're learning an awful lot. They've been open about a year now. They're progressing nicely. And we'll continue to look at developing that portfolio and potentially looking at some franchise partners in North America as well. We think that would be a very interesting way of expanding there, but it's in the experimental, I often call it the R&D sort of phase in the US at the moment.
So what have you learned so far? Do Americans work out differently to the Brits?
Well, interestingly, I walk into our facilities in the US and guess what? They look and feel much like our facilities in the UK or in Switzerland or elsewhere. The fundamental needs that people have are similar. There are some differences in parts of the equation. Americans, our sites in the US markets have tended to ramp up a little bit more slowly than in the UK, but part of that may be due to the time in which we launched in the kind of post-COVID era. We actually had most of the sites when Omicron was still happening. So we're still learning lessons and trying to interpret those over time.
What did you learn about the company, Humphrey, in COVID and lockdown? Because I know it was such, when gyms were closed, it was such a difficult period. But do you think it's made you more resilient as a company for what's to come?
Yeah, that's a really good question and point, Francine. Without a shadow of the doubt, it's made us more resilient. Look, we'd taken 10 years to build this business, and we were given 10 hours by the Prime Minister to close it down. In many of our gyms, we didn't even know where the keys were because we'd never closed them before because we operate 24/7, 365 days a year. So it was an absolute sort of revolution for us. And I think in tough times, you really find out what you're made of individually in terms of resilience and collectively as a team. And I think we proved through 2 and now a third through 2022, very tough year, that the business is strong and resilient and has an excellent model. and that the team is not just a good times team, that the team is capable of acting in the most difficult management environment. In 30 years in business, I haven't seen anything like the last 2 or 3 years, incredibly testing, and I'm very proud of the resilience that the team and the business has shown in that regard. We're still fighting our way back, we recognize that, but we've demonstrated that we're capable in dealing with the toughest things that can be thrown at a management team, I think.
Humphrey, thanks so much for, well, first of all, coming on, and good luck also with the people that want to get fit in January. A lot of people are also doing dry January, which to me sounds like a terrible idea, but each to their own. Humphrey Cobalt there, Chief Executive Officer of Pure Gym. Let's get straight to your Bloomberg Business Flash now. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The EU is moving towards a requirement for masks and pre-flight COVID testing on travellers from China. A Commission spokesman says a strong majority of countries back tests, which would go beyond what EU health authorities did recommend last week. Any change will need to be approved by EU ambassadors who are actually meeting later today. Chinese regulators have approved a plan by Jack Ma's Ant Group to raise $1.5 billion for its consumer unit. The green light is a sign of progress in the fintech firm's government-ordered overhaul, which will leave Ant controlling half of its shares after the deal. The University of California is investing $4 billion in the massive Blackstone Real Estate Income Trust. The fund has faced higher redemptions in recent months and been forced to limit withdrawals. Blackstone has sweetened the deal by earmarking a $1 billion backstop to help the university get a minimum annualized return of 11.25%. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Coming up, Bloomberg MLive's team are betting against the dollar this year. We discuss why next. This is Bloomberg.
They're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Count Under the Close. Welcome to Bloomberg Crypto.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, as much as 2022 is about the dollar reigning supreme, this year will be about the yen, the pound, and the euro dominating the list of winners. Now, that's the view of Ven Ram from Bloomberg's MLive team. So, Ven, first of all, it's a bit of a contrarian call that you have. So walk us through what you expect on G10 currencies this year.
Morning, Francine. It is indeed a contrarian call, if not an outright foolish and bold call. But, the point is, real rate differentials underpin some of the bigger moves that we saw last year, especially for the yen, where we saw real rates move some 350 basis points north to favor the dollar. Some of that is going to come off this year, primarily because the Fed is going to stop raising rates once it gets to 5.25, and the BOJ is going to tweak its curve control yet again. And therefore, I think that the dollar will surrender some of its gains, and currencies like the euro, the pound, and the yen will stand to gain this year.
So, Ven, why do you expect the pound, for example, to strengthen as much as you think it will?
The pound at the moment, it captures a lot of gloom at 120. We've already priced the recession and a lot more. And I do think that, the inflation imperative for the BOE just doesn't go away. We have just seen news that the food inflation in the UK has hit a record. So the BOE has got, because they didn't act emphatically enough earlier on in the cycle, they will have to do they've got tremendous work to do in the back end of the game, and therefore they will have to keep raising rates much longer than the Fed and probably even the ECB has to do. So, and therefore that will push up the pound. And I do think that the calls for a recession are overpriced and overblown, because I do think that we will muddle through 2023 in the UK, but it's not going to be as deep a recession as many fear.
So, Ven, what could go wrong with your outlook?
A lot could go wrong with the outlook, particularly inflation, how inflation evolves in the US and what the Fed's response to it is. If inflation in the US is sticky around 5 to 7%, the Fed is hardly going to say, okay, let's start cutting rates even in the face of a recession, because their primary goal is to make sure that inflation converges to the 2% target they are targeting. And if there's signs that inflation is sticky and the economy is a lot more resilient, then the dollar will be bid all over again.
So, Ven, if you look at, we had some French inflation today, unexpectedly slowing. Do you think bond prices are misinterpreting some of the data out of the Eurozone?
Absolutely so, because if in the ECB, we heard yesterday from the ECB speakers that they're looking at two more significant rate increases. That means February and March is another 50 basis points each. That will take the deposit rate to 3% already. And if you look at the 2-year German yield, it's at 2.60 now. So that is nowhere in convergence and in consonance with where the ECB is going to go. And if the ECB is targeting real positive interest rates, net of inflation, the inflation projection of 6.3% for this year, we are nowhere near positive real rates. So therefore, ECB rates will have to go a lot higher, and with it, the euro will climb, and German yields will also climb higher.
All right, Ven, thank you so much, as always, for some of your insights and, of course, some of your thoughts. You can also find Ven Ram not only on our live blog, but also on the Bloomberg terminal, Bloomberg's MLive Ven Ram. Now, this is a picture overall for some of the markets that we're looking into. It is one thing that we're watching out for today. This is the Fed minutes to reveal the source of inflation, anxiousness that's pushing up rates. Now, Jay Powell did tie pessimism on the outlook for prices and labor strength. We'll see if that's confirmed, of course, from the minutes today. Bloomberg Surveillance Early Edition continues in the next hour with Matt Miller, Katie Lyons in New York, and Edwards in London. This is Bloomberg.
about cryptocurrencies? Are you a believer in cryptocurrencies?
No, I'm not a believer in cryptocurrencies, and I would say that cryptocurrencies are a bubble. And I would describe cryptocurrencies as a limited supply of nothing. So to the extent there's more demand than the limited supply, the price would go up. But to the extent the demand falls, then the price would go down. There's no intrinsic value to any of the cryptocurrencies, except that there's a limited amount.
Well, based on what you've just said, why would you not put a big short of some type on cryptocurrencies? Or maybe you have, but do you think that's a good short?
Well, you know, when we look for these subprime, the reason why we shorted the subprime in size because it was asymmetrical. You're shorting a bond at par that has a limited duration that trades at a 1% spread of treasury, so you can't lose more than the spread in the duration. Yet if it defaults, you can make the par amount. In crypto, there's unlimited downside. So even though I could be right over the long term, in the short term, as the case of Bitcoin, you know, went from 5,000 to 45,000, you know, I would be wiped out on the short side. So it's just too volatile to short.
They've raised their inflation forecast.
Firm and immediate action.
He wants to destroy my country.
Elon Musk to buy Twitter.
Overturned Roe versus Wade.
Boris Johnson will call it
Donald
quits.
Trump's plan to overturn the
Unprecedented
election.
search warrant at the home of our former president.
Queen Elizabeth has died.
Xi Jinping got his third consecutive term.
Pound falls to an all-time low.
The shortest ever serving prime minister.
President Biden and Xi shake hands.
FTX filed for bankruptcy.
The red wave that never was.
Protesting his zero COVID policy.
This policy U-turn on zero COVID, which was executed on 7 December, will raise a whole series of questions in Chinese political circles about the fallibility of Xi Jinping's political judgments.
The global economy has never experienced anything like that. That level of uncertainty in the persona of one human being.
If China reopens forcefully and fast, you could see a bit of a replay of the commodity-led inflation which we had coming into this year or the last year.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. Inflation in France unexpectedly slows last month. That takes some of the pressure off, perhaps, policymakers at the European Central Bank. China plans to shore up its too-big-to-fail property developers. Banks will be encouraged to boost the balance sheets of systemically important real estate firms. And chaos on Capitol Hill. Republicans will try again today after Kevin McCarthy loses 3 attempts to become Speaker of the House. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Plenty of chaos in Washington then, Kaylee, which we will no doubt talk about this hour. But in terms of market moves, market's very focused on some of the news lines, and there are plenty of those coming out of China.
Yeah, there were a number of positive reports from China, at least in terms of what it did to risk sentiment, Anna, broadly leading to an update for Asian stocks. But Hong Kong really is what led the charge. The Hang Seng Index was up more than 3% on the day. Now, one of those positive news stories is that China is considering stepping up support further for property developers. That really aided risk sentiment as a whole. But there also were some more specific stories, including Alibaba. Those shares rose nearly 9% in Hong Kong after a report that Ant Group has won approval for a $1.5 billion capital raising plan for its consumer unit. So that lifting those shares. And of course, that's a very large stock, so that helped lift the broader market as well. Then you had a separate report, Bloomberg reporting that China is considering easing the ban on Australian coal imports that has been in place for more than 2 years. So that had a big impact in foreign exchange, specifically for the Australian dollar. Aussie dollar trading at 68.72 right now, 68 cents to the US dollar, up more than 2%, now at its strongest since September. That really leading the move in G10, but every single G10 currency is stronger against the dollar today. It is a weaker dollar story. And then in the bond market, we have seen yields moving dramatically lower. Really saw that in treasuries yesterday, and follow through from that in the Asia Pacific overnight. The 10-year Australian yield fell 10 basis points on the day, Matt.
All right, I'm looking at S&P futures, Kaylee, that are gaining right now, just about 0.4%. We were down about that much in the cash trade yesterday, and today is the last day for an official Santa Claus rally to pull through. In 1972, Yale Hirsch wrote in the Stock Trader's Almanac that the Santa Claus rally is the last 5 days of the year, plus the first 2 days, trading days, of January, and the average gain, at least then, was 1.3%. So we'd have to gain about 1.25% to get our fair Santa Claus rally this year. The 10-year yield coming down, so offering a little bit less competition to stocks with the yield at 369, but of course that is money going into treasuries that could be going into equities. NYMEX crude is off more than 2%, 75.30 a barrel. So this could be the concern that China's economy really isn't going anywhere fast, although we had a number of stories about China helping its developers that we're going to talk about, I'm sure, today. On the other hand, not putting as much money into chips. I don't know how that could feed through into crude, but I just thought I'd mention it. Bitcoin, I was going to take Bitcoin off this board, but I left it off. It's still 16,000 and change, right? $16,835. Kaylee pointed out yesterday to me a story by Joe Weisenthal that shows even at this level, Bitcoin is still up and a 1.69 billion% since its first quote. So not bad.
Right. Since its first quote, okay, if you were in really at the beginning, then that makes sense, Matt, which I know many people might have been. This is what we see on European equity markets. Matt's obviously been doing his homework as to the phenomenon surrounding the man in red and whether he really can deliver any kind of Santa Claus rally. Well, we were here yesterday, weren't we? We saw European equity markets doing positive things about this time yesterday, and that didn't really give us much of a sense of where US markets were heading. Later, it was Apple and Tesla and the like that weighed us down. But let's have another go at it, shall we? European equity markets are on the rise today, up by more than 1%, up by more than 1.4% on the CAC Heron. What we do see, though, is a divide around Europe based on the sector exposure. And one sector that's doing really well today is consumer discretionary, in particular the luxury goods. I could have picked Burberry, I could have picked a number of other names, but I picked LVMH as it was the best performing earlier on today, up by 3.3%. And this has to do with a number of policies, as Matt mentioned, and Kaylee also, a number of policies coming out of China that do seem to be pro-growth, whether that's to do with Ant Group and consumers there, or whether it's to do with not the chip sector, the property sector, or indeed a number of other areas. We are seeing some pro-growth policies coming out of China, and that's weighing up to something positive for luxury goods. On the other hand, oil prices are down by more than 2%, and that is weighing on energy stocks in Europe. So that sector down by 1.6%. Here we've got the influence of the inflation print we had out earlier on, and we'll get more details from Danny on this in just a moment. But the inflation number coming in lower than had been anticipated, and as a result, we see yields dropping. Does this change our thinking around the ECB, or is this in line with ECB thinking? That's a question for later, perhaps. The euro may be benefiting a little bit from weaker dollar, 106.11, up by 0.6% in what is broadly a risk-on environment then, Matt.
It's interesting. So the euro rising here and stocks are rising. Basically, I think a lot of it is tied to that inflation data that you mentioned, Anna. So not really coming in as strong as expected. We saw that in France, unexpectedly slowing inflation in December. We saw that in Germany, of course, the story out yesterday. And last week we had a story out on inflation in Spain, also coming out slower than expected. That should augur well for the ECB or for stocks, right? Because they don't have to raise rates maybe as much as they would have. Although inflation is still a huge threat, I see that we're expecting Europe-wide 9.5% print in December, a slowdown from the 10.1% that we saw in November. Danny Berger joins us to talk about what's prompting that slowdown. Danny?
I mean, a lot of factors, Matt. You went over a lot of them, and yes, everything is slowing. They're slowing for consecutive months. A lot of this has to do with the energy story in Europe. Natural gas Dutch front-month futures are back at the levels they were before Russia invaded Ukraine. So that is allowing some ease, along with some government help to pay the bills. But I will say there's just so much caution around this idea that this is enough to have the ECB back off. Even in recent days, we keep hearing from policymaker after policymaker saying that we are worried inflation expectations are getting entrenched. Nagel, for example, saying that, look, one piece of data does not make a trend. We need to be aggressive. We need to be forceful. So sure, these figures are lower, again, partially thanks to energy, but that picture's uncertain, as are things like labor unrest that can add to the inflation fuel.
Okay, Danny, good morning to you. So we see some reasons to be a little hopeful about inflation coming off recent highs then in Europe. What does all of this mean for US prices and the US inflation dynamic?
Well, certainly different drivers, but there are some similarities, right? We have gotten some softer prints. There was, of course, that December CPI, which markets got extremely excited about. But to sound like Nagel here, one inflation print doesn't make a trend. Break-evens have fallen. Part of that also might be that energy prices in the US are also low. Oil prices are low too. But really the concern for the Fed, more so than the ECB, is how tight the labor market is, that could continue to feed into demand-driven inflation, which is what our Bloomberg economics team and Anna Wong believes will happen, that household balance sheets will be strong, atypically strong, and that means inflation will be well above the Fed's 2% target for the whole of 2023.
All right, and we're waiting for those Fed minutes later on this afternoon. Bloomberg's Danny Berger, thank you so much. Let's turn to the China story or stories now. Bloomberg has learned that China is considering steps to further support some of its too big to fail developers. That's as the ongoing property downturn has led to a liquidity crunch. The aid could include equity financing and loans, enabling creation of real estate investment trusts and driving acquisitions. Joining us now is Lulu Chen, Bloomberg's investing and real estate editor in Hong Kong. So Lulu, what's prompting this latest move?
Well, China wants to avoid a disorderly collapse of the property market, which could spill into the larger financial market. In November, the government set the tone and issued its most sweeping package of policy support measures. What we're seeing today, the trickle of positive news coming out of the country, that's a follow-up on these policy measures, in addition to bolster the property market that we continue to see plummet in December, and also housing sales continue to accelerate their drop in December. So with these policies, hopefully we'll see a turnaround early this year.
Okay, so that's the property sector. We had a number of news lines out when it comes to too big to fail developers and also private equity and their ability to put money into real estate. Meanwhile, Chinese officials are discussing easing a ban on Australian coal, Lulu. So when you add that and you add up the property news, it's starting to feel quite growth positive. What's driving this particular change?
It does seem that the Chinese government has shifted its focus on driving the economy and refocusing on the economy after the Party Congress. And this softening of stance and the warming and improvement in relationships between China and Australia is part of a broader trend where China's foreign ministry has also improved its relationships and its stance against the U.S. as well. For China, there's another aspect as well, which is to secure its energy supply, and that's why increasing imports from Australia would help with that.
All right, Lulu, thanks very much. Bloomberg's Lulu Chen talking to us about the China story this morning. Very much moving markets. Let's get back, though, to the U.S. It was chaos on the House floor yesterday. In 3 rounds of balloting, Republican Kevin McCarthy couldn't get the votes he needed to become House Speaker.
Today, is it the day I wanted to have? No. I mean, there's a lot of things we wanted to do. We wanted to repeal 87,000 IRS agents. We wanted to set up the number of investigations we had going. We wanted to notice the different committee hearings we'd have actually on the border. None of that got transpired. But if we're able to work out our differences and take this time, we'll only be stronger to be able to accomplish the things we want.
Emily Wilkins, Bloomberg government reporter, joins us now in D.C. So, Emily, what are we likely to see today when the House votes again? It's only the first time in 100 years that a majority leader hasn't gotten through on his first vote.
It
It really is a historic moment, and it's also just a moment that underscores how the next 2 years are likely going to play out in the House. Just the level of chaos that we are seeing, this last-minute scramble to negotiate and to bargain, really raises a lot of concerns for what this is going to mean for other must-pass bills. But as far as today, we're just expecting more votes for Speaker. And at this point, Matt, it's really difficult to see how this logjam is actually cleared. The members who have voted against McCarthy, there were 19 at the start, then their numbers grew to 20. They've said that they still want more concessions for him on some of them on these House rules, and think of that more as the power in the chamber. These members want to have more power as proceedings go along. And a lot of folks will say, sure, some of the things they're arguing for, these transparency measures, they really do think they are positive things to come. But remember, the more power that goes to the rank and file members, the more difficult it can be for leadership to actually get things done. And that's really the core of the trade-off here. And you are seeing increasing frustrations among Republicans toward those members who are still holding out, saying that they're preventing them from getting their agenda done, that they're bringing chaos into the process. There's just really a lot of tension right now, and it's just not clear how this gets resolved.
Okay, so Emily, let's talk about some of the specific things that need to get done, like raising the debt limit. Does this just increase the probability that the U.S. is in a default scenario?
I would say this absolutely raises the concerns that the U.S. could wind up defaulting on this. Not only does it show that there is a small but powerful and persistent fraction of Republicans who are willing to hold out to get what they want to get done, but this entire process has weakened Kevin McCarthy's hand. Even if he does become Speaker at the end of the day, he's not going in as a powerful, united candidate with this conference behind him. He's going in as someone who has had some serious issues trying to get everyone together. So I'd say that absolutely raises concerns for Republicans just in terms of passing the debt limit, passing their other priorities, keeping the government open. All of these things are things that need to be done. And I think there's just a huge question mark at this point whether they can deliver.
All right, Emily Wilkins of Bloomberg Government, I know you had a very long night, so thank you for waking up early for us this morning. We really appreciate it. Now let's move from politics back to the markets and take a look at some stocks moving in pre-market trading in the U.S. And of course, the one we all have been watching for some time now is Tesla, coming off of its worst year on record in 2022 with a 65% annual decline, then started 2023 off yesterday with a 12% drop because of concern around the fact that they missed deliveries once again. But it seems like we are seeing some buying of the dip this morning. We know Kathy Wood is buying the dip. ARK Investment Management yesterday purchased about 176,000 shares of Tesla. That stock is up about 2% before the bell. Another stock that we watched mega cap-wise yesterday was Apple, as its market value fell below $2 trillion. The stock down more than 3% yesterday, but also seeing a rebound this morning. Apple right now up about 1.2%. One big tech stock sitting things out, though, this morning is Microsoft. These shares are actually down about 2% after getting downgraded over at UBS. The analyst there citing concern about growth in the cloud computing business, that Azure cloud business, cut his price target as well to $250 a share. This morning, it's trading just shy of $235, Anna.
And talking about what's coming up on the programme, then we move on from those specific names, Kaylee, to the macro. Holger Schmieding joins us, Berenberg chief economist. We'll get his take on some of that inflation data we discussed earlier. What difference is that making to his assessments of the ECB and relative rates across the Atlantic? And on the showdown in the House, Terry Haynes joins us from Pangea Policy. He's going to give us his thoughts on how significant or otherwise this is for markets. This is Bloomberg.
Nutrigenomics and precision nutrition is one of those rare scientific fields that overlaps with the Instagram-friendly wellness industry.
There is a lot of interest in this idea of personalized nutrition, and especially how accessible it is to the public. You can go on Google and type personalized nutrition or diet and genes, and you will find dozens of different companies that offer this nutrition precision tests.
One of those companies is Routine. Routine claims that their personalized tests stemming from sciences like nutrigenomics make their supplements different. But even with the claims from Routine, as well as dozens of other personalized nutrition companies, the science still has a long way to go.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to Bloomberg Surveillance, the way too early edition. We are simulcast on both Bloomberg Television and radio. And I'm watching the dollar today. It has come down considerably from the all-time high that we saw in the BBDXY just a couple of months ago. 1353 was the reading there. But so have leveraged fund net dollar positions. So bullishness coming off of its 2022 peaks and really looks like a cliff edge. Joining us now to talk about this is Ven Ram, Bloomberg Markets Live strategist. So Ven, what do we replace King Dollar with? Is it all about the yen? Does the pound get hurt more than other currencies? What's your take as we kick off 2023?
Morning, Matt. Your chart says it all there. I think that, you know, the yen and the euro, the pound, and the Canadian dollars are going to be some of the stellar performers for 2023. Why do I say that? Because if the Fed stops raising rates once it gets to 525, which is the level they indicated in the dot plot, then I think real interest rate differentials will begin to narrow in favor of these currencies, and therefore they will do well.
Okay, so that bodes well then for the yen. I can see that for the yen and for the euro, given policy, and to some extent for the pound, given policy. But we know that the UK faces a number of headwinds in terms of other policy-making areas, Ven. So when you say positive for the pound, is that because of UK specifics or just as a function of dollar weakness or euro strength?
It is predominantly because of euro strength. The pound has been behaving like a euro derivative, and therefore any strength in the euro, the pound will absorb in excess of it. If you look at the pound, it has surged some 17% since the lows of the last year. And that is an impressive rally. And all along that period, the markets have always known that the UK economy is going to muddle through 2023. So what is that ebullience because of? That ebullience stems purely from how the euro has behaved. Also, we can't forget that even though the UK economy is going to muddle through this year, the inflation narrative is going to be predominant for the BOE, which means that they won't be able to stop raising rates, even in the face of a slowdown. And that will support the pound as well.
Then we just had a question come in via IB from a viewer. How are you feeling about gold?
Well, I think gold has some upside, because if the Fed is going to stop at 525, then gold will be bid, because all through last year, when the Fed was raising rates, gold showed its convexity, which means that when rates are going up, you would expect gold to fall, but it didn't happen really to the extent that you would have expected. And why was that? That was because convexity came to the rescue of gold. Now, convexity works both ways. So if it's not going to lose a lot when rates go up, it's going to gain a bit more when rates go down, and it's a bit of a heads you lose, tails I win kind of scenario, and that is perfect for gold.
Okay, we'll watch that then. We'll watch the precious metal. Ven, thank you very much. Ven Ram of the Bloomberg Markets Live team. And you can check out the thoughts of the MLive team. MLIV Go is the function to use on your Bloomberg terminal to keep across the Markets Live blog. This is Bloomberg.
They've raised their inflation forecast.
Firm and immediate action.
He wants to destroy my country.
Elon Musk to buy Twitter.
Overturned Roe versus Wade.
Boris Johnson will call it
Donald
quits.
Trump's plan to overturn the
Unprecedented
election.
search warrant at the home of our former
Queen
president.
Elizabeth has died.
Xi Jinping got his third consecutive
The pound falls to an all-time low.
The shortest ever serving prime minister.
Presidents Biden and Xi shake hands.
FTX filed for bankruptcy.
The red wave that never was.
Protesting his zero COVID policy.
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A piece of an asteroid is a piece of the earliest beginnings of the solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown, gather samples, and then make the long trip back. And while behemoths like NASA and SpaceX grab headlines, it's a relatively young space agency. The Japan Aerospace Exploration Agency, better known as JAXA, that is taking the giant leap necessary to bring the mysteries of space back down to Earth.
Lisa, you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Now, keeping you up to date with news from around the world, here's the first word. The Federal Reserve is about to shed more light on why it's worried that strong inflation may linger. Today, the Fed will publish minutes of last month's policy meeting. At the end of that meeting, Fed officials published new projections showing they expected inflation would end 2023 higher than they previously thought. The European Union is moving toward requiring COVID tests for travelers from China. EU health advisors have agreed on a draft opinion that includes masking and pre-flight testing requirements. Several European countries, including Italy and Spain, have already imposed testing rules on flights from China. FTX founder Sam Bankman-Fried now faces a trial in October on the collapse of his crypto empire. In a court in Manhattan, Bankman-Fried pleaded not guilty to criminal charges. U.S. prosecutors say they expect to produce all the evidence for the case in the next 4 weeks. And it's another policy shift at Twitter since Elon Musk took control. The company will relax a 3-year ban on political advertising to, quote, facilitate public conversation around important topics. Further details will be announced. Twitter imposed its ban in 2019, saying that political message reach should be earned, not bought. And coming up, we'll go back from politics to macroeconomics and talk about the softening in inflation data we're seeing in Europe. Preview the Fed minutes later on this afternoon. Holger Schmieding, Berenberg chief economist, is joining us next. This is Bloomberg.
going to name a couple of your babies. I don't know if I'm asking you to choose amongst your children, but some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city. It's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It's the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Inflation in France unexpectedly slows last month. That takes some of the pressure off policymakers at the European Central Bank, perhaps. China plans to shore up its too-big-to-fail property developers. Banks will be encouraged to boost the balance sheets of systemically important real estate firms. And chaos on Capitol Hill. Republicans will try again today after Kevin McCarthy loses 3 attempts to become Speaker of the House. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. And Matt, European equity market's not doing too badly today, but we said that this time yesterday, and it didn't really tell us much about which way the U.S. session was going to go.
Yeah, no, there has been a lot of volatility, I guess, to kick off 2023. Maybe today we'll see consistent gains. We haven't really had much of a Santa Claus rally, so we're going to have to start looking to other measures for the stock bulls. But we do have, right now at least, are we 4 hours away?
Yes.
4 hours away from the open, and we're up 0.4%. As you said, Anna, that could turn around and often does before we get much deep into the cash trade. I wanted to show a couple of commodities here. NYMEX crude is down considerably, 2.25%. I think that's very interesting. 75.23 for a barrel of West Texas Intermediate crude, and this just, I guess, shows investors' concerns about the COVID spike in China and how much that could hinder a pickup there in terms of gasoline purchases. Gold is up 1%. We're looking at $18.58 a troy ounce. It's come up considerably. If you look at the chart, it's really interesting because, when we were less concerned about inflation, it was rising. As inflation became the real boogeyman, it was dropping. And now that we're talking about, getting close to a terminal rate for the Fed, it's leveling out and coming back up. And then the 2s, 10s, buddy of mine, Anthony, who watches the show, suggested I use this to replace Bitcoin as the spread starts to go back down again. We'd seen a recovery in this inverted spread, right? But now it's getting worse again. What does that say about the economy, especially as it looks like the U.S. government is having trouble electing a Speaker of the House? Kaylee, what do you see in terms of the pre-market movers?
Well, I'm keeping an eye on some of those mega cap tech stocks. They're definitely less mega cap than they were because both of these names, Tesla and Apple, have seen their market valuations come in substantially over the course of the last year or so. Tesla, of course, being down 65% in 2022, then starting off 2023 with a 12% loss. A lot of concern about demand after weaker deliveries numbers were posted over the long weekend. But buying of the dip coming in. Kathy Wood is one of those participants, but others seem to be as well, with Tesla up about 2% 2%, so a little bit of a recovery before the bell this morning. Meanwhile, Apple, after falling below $2 trillion in value, also rebounding to the tune of 1%. But outside of U.S. tech, Chinese technology stocks also ones to watch. We saw a big rally in the Asian session overnight. Alibaba was up about 9% in Hong Kong. That is continuing in the ADRs here in the U.S. Alibaba's up about 6.7%, and JD.com higher by nearly that much as well, Anna.
And Kaylee, here on European equity markets, we're doing pretty well, up by just over 1%. If there was any macro signal in what we heard from Tesla or from Apple yesterday, then it's certainly not pushing into the European session and weighing on sentiment here. Instead, Kaylee, we're picking up on what you mentioned there, some of the more optimistic news flow surrounding China, whether it comes to the property sector or to the coal sector and what they're planning to do with Australian coal. All of that adding to sort of some growth positive policies, which means Europe goes higher and is led by consumer discretionary goods, luxury goods in particular. So luxury stocks are moving higher, up by 3.8% on LVMH. I could have put in a number of other names, but that's one that is certainly on the move this morning. To the other end of the spectrum, and what is weighing on London is what's going on with energy stocks, down by 1.9% right now, as we see oil prices retreat by, earlier on today, 2%. And so as a result, we see weight on those types of stocks. The French 10-year yield, we're seeing the yield coming down. I put in the French yield because we got French data on inflation earlier on, which came in weaker than had been anticipated. But I could have put in German yields, Italian yields, all these yields across Europe falling. There seems to be a bit of an assessment, misplaced or not, that this makes a difference for the ECB and the extent of the hikes that we still need to see from the ECB, Matt.
Yeah, it'll be interesting to see if we get another big move from the ECB, or as inflation seems to slow down, if they can kind of chill out a little bit. Joining us to talk about that and the rest of the global economy is Holger Schmieding, Berenberg chief economist. Holger, I did notice, or we have been noticing, a trend in terms of European inflation coming in lighter than expected in France, in Germany, in Spain. Does that mean that the ECB can kind of calm down in terms of the rate rises?
It probably does not mean that. The inflation data at the moment are volatile. They're distorted, for instance, in Germany by a one-off payment. And the European Central Bank for now is determined to bring inflation down much, much more. So what they have de facto told us in December, 50 basis point rate hike, in February, 50 basis point rate hike, a steady pace, as they call it in March, that is likely still to come. What these data do, however, support is our call that beyond the 100 basis points that have been de facto pre-announced, the ECB will then probably be on hold instead of going further.
Good morning to you, Holger. Good to see you. So that's your read across into the ECB and what it does to the thinking there. I mean, one of the best news stories for the Eurozone over the winter must have been the weather, basically, and the ability, therefore, for Europe to build up and keep its storage of gas at relatively high levels. Does this give you reason to be comforted about this winter? How worried are you, though, about the sort of structural energy challenges that still lie ahead in winters still to come?
The very good news is that the rather comfortable situation which we currently now have with gas in Europe is not just a consequence of the weather, which definitely does help, but it's also a consequence of consumers and businesses are using less gas, even adjusted for weather effects, and also to some extent that we have ramped up our capacity to import liquid natural gas. At the moment, with 1/3 of the heating season, this heating season already being over, our storage facilities are filled so much that we are, in percent of capacity, 12.6% above what is normal for this time of the year. And the experience of the first third of this heating season gives me some confidence that in a year's time, we will also be able to cope. After all, our engineers will have another 12 months to make further adjustments to reduce the consumption of energy, and in particular the consumption of gas, which is no longer quite as expensive as it used to be a few weeks ago, but still is expensive.
Yeah, that's going to be fascinating, isn't it, to see how Europe can cope with next winter and how all of these challenges are managed in terms of energy needs. What about the role of China in 2023 then, Holger? There seems to be a lot of competing dynamics in China right now. There's the COVID reopening story, seemingly quite positive perhaps for the economy. Of course, the human toll of that as yet unknown. And then lots of other policy initiatives that seem to be supportive around property, around big tech, we can point to these, and around coal. Just in the last few days, some pretty positive announcements. What kind of role do you expect China to play?
There's a lot going on in China, but I do not expect China to play a major role for the European recovery. China will probably have a rough winter now with a surge in COVID cases, which could have some impact on supply chains temporarily, but we are already having a winter recession in Europe, so that will not add much to that. And later this year, probably China will be back on a growth track, moderate growth around 4%. The stimulus is not as effective as it used to be in the past, so I expect China to be neither a significant drag nor a significant driver of the European recession, followed by the European rebound.
Okay, Kaylee.
Holger, we've talked a lot about inflation, but here in the U.S., when we are thinking about the Federal Reserve, it seems a large part of the focus has shifted away from inflation and just CPI figures to the labor market data, which has proved incredibly resilient. So ahead of JOLTS later today and jobless claims tomorrow and ultimately the December payrolls report on Friday, what is your read of the persistent tightness of the labor market and what it's going to mean for the Federal Reserve as it tries to create some slack?
You're absolutely right. What we need to see in the US is that wage pressures are easing. So far, the evidence on that is mixed, to put it mildly. And hence, before we talk about the Fed pivot, which may come, and we do expect a rate cut late in the year, we will have to see clearer evidence that in the US the labor market is softening, that is translating into wage inflation. But we may be a bit away from that for now. For the US, the Fed will likely still send some hawkish messages, will likely still go ahead with, say, 325 basis point rate hikes to come, and then go for a pause rather than a pivot until late in the year the labor market data are convincingly weaker and thus underpin a pivot.
What does it take, Holger, to turn the Fed around? Is it just weakness in labor markets? Do you need to see something break in the credit market? For example, a jump to 9 or 10% defaults, would that do it?
That would probably not the issue for the Fed to address with rate policy. That would probably require other interventions in markets rather than changing the overall course of rate policy. Remember, we have seen it in the UK in the wake of Trussonomics, that the Bank of England reacted with a very targeted intervention rather than with a rate cut to get over the temporary financial turmoil. So we need to distinguish between what is the policy response in order to get inflation under control and what could be the more temporary emergency responses to specific situations, which I very much hope will not erupt in credit markets.
Holger, thanks very much for your time. Holger Schmieding joining us there from Berenberg. When we return, we'll talk about US politics, chaos in Washington yesterday, a failure to elect a speaker yet. That battle continues today. We'll talk to Terry Haynes, Pangea Policy founder. That's next. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
No one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority.
No persons having received a majority of the whole number of votes cast by surname, a speaker has not been elected.
The clerk of the U.S. House of Representatives speaking after Republican leader Kevin McCarthy failed to win the speakership. A small group of party dissidents delivered a stunning political rebuke to the California Republican that previews potential turmoil in the chamber over the next 2 years. Joining us now to discuss is Terry Haynes, Pangea Policy founder, up early for us this morning. Terry, let's just game out different scenarios here. What probability do you assign to Kevin McCarthy actually being able to pull this off? And what probability that someone else is going to have to step up to try and unite the party, and who would that person be?
Good morning, Kaylee, and Happy New Year to everybody there. I have never been somebody who thought that McCarthy had much of a chance of pulling this off. I was about 55%, which in market terms is, of course, not a vote of confidence. I see it as much lower the longer this goes. I think that what's going to end up happening is that, and this is very much gut on my part, I should say, is that the House turns to either a more reliable conservative, somebody who is not McCarthy, but yet not one of these 20 or so people that have been consistently voting against him, or alternatively, they turn to more of a centrist person that is acceptable to all the factions. But it's very clear at this point that this is a not McCarthy sort of movement, and there's a lot of vanity here on both sides, and one of the vanities is that only McCarthy can do this, and of course that's not true. This is not an indispensable man in an indispensable moment. So in the longer term, he's going to have to step aside, I think.
Terry, I want to pick up on one idea you just alluded to, the idea that there's a number of factions within the Republican Party right now. So I wonder how the inability to unite around one leader in the House may also have implications or foretell what could come when it comes time to pick a nominee for the Republican Party in 2024.
Oh, sure. I always think that there aren't two political parties. There are four factions. There are left to right. There are progressive Democrats, centrist Republicans, conservative Republicans. You're seeing two of these factions war right now, but you can always see this in both parties, and how delicately things tend to get stitched together. So you're seeing a factional battle right now. In the short term, let me say three things quickly. Firstly, in the short term, this makes absolutely no difference to what markets already knew was going to happen in Washington in 2023. Domestic gridlock, kind of basic spending agreement at the end of the day. I'll get back to that. And unanimity in foreign policy. I think all those things continue. In the medium to long term, by which I mean sort of 3 to 6 months, though, this scenario, what you've seen play out over the last day or so, means that there is now a rising risk of U.S. government defaults later this summer or into the fall. Very simply because these folks want to use the debt ceiling fight and the need to raise the debt ceiling as leverage to reduce spending, and they'll be willing to engage in brinksmanship to do it. That will provide a significant market negative that'll loom for months.
Terry,
yes, I'm sorry.
I think a lot of people are confused because this Freedom Caucus is painted as kind of an extreme right-wing, hardliner, election-denying, Trump-supporting group of representatives. And isn't that exactly what Kevin McCarthy is? I mean, it doesn't make sense to me that they would not be on the same page. And then I also hear that this Freedom Caucus is asking for you know, things that seem like very responsible Democratic government, a vote on a balanced budget, a vote on term limits. Those things sound like, you know, something we learned in social studies was the right way to go. So how do I, you know, square this circle?
Both very good questions, Matt. I think the way I would suggest you think about this is that, you know, any politician that is trying to lead a broad caucus with diverse views has to put a foot in a lot of different camps and bring confidence. McCarthy has a lot of confidence from his caucus, but apparently just not enough, number one. Number two, what I'd say to you about the votes and the other things that the purists, the 20 purists want is that, you know, what they're doing is actually attacking their own caucus by doing that. I mean, the idea that they would get to pick their own legal counsels, that they'd get to pick their committee assignments, you know, that actually is a direct affront to the broader caucus and how those choices are generally made. So, you know, what these folks are doing is not looking to compromise. This is very much about McCarthy personally and very much about painting him as a swamp creature. There's an untold story there, and I'm not quite sure where the original sin is, but you know, they're bound and determined to have McCarthy not be speaker, and I think they get that, but they don't win on the other stuff.
Okay, and Terry, I was taking on board all you were saying earlier about how this doesn't change what the market already knew about what government in Washington is going to look like in 2023. There have been some who've suggested that perhaps this could have an impact on debt debates, take us further to the edge, therefore push up borrowing costs or the cost of insurance against U.S. default. Is that some kind of market impact that we could watch for?
Oh, absolutely, Anna. You know, what I've been saying since before all this started yesterday was that, you don't have much change in the short term in Washington here. The same, you have the same sort of factional, no control Congress, marginally Republican House, marginally Democratic Senate, that everybody knew we were going to have anyway. That doesn't change regardless of who's speaker. Where the change comes is that we now have, and will continue to have for a period of months, an increased likelihood that there is some kind of default as a result of the whole debt ceiling debate, and that will shadow markets increasingly throughout the spring and summer, I think. So that's and impact things like borrowing costs. So that's very much a real-time dividend of the kind of demonstration these 20 folks are making right now, and it is an eventual serious market negative.
Okay, Terry, thanks very much for joining us. Terry Haynes joining us there from Pangea Policy with his thoughts on the politics and where it meets markets. Coming up on the program, the trial is set. We will discuss what comes next in the case against Sam Bankman-Fried. That's coming up. This is Bloomberg.
The deal was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kayla Lyons here in New York. Anna Edwards with us out of London. Now, FTX founder Sam Bankman-Fried pled not guilty to criminal charges in a courthouse in Lower Manhattan yesterday. The once crypto billionaire will face trial in October now over accusations of fraud. Here with more is Bloomberg's Emily Nicole. So, Emily, what do we know about? It's a long way away, right? 10 months from now until he faces trial, and it's not clear yet whether he's going to stay out on bail. He needs a couple of guarantors to sign on to make that happen.
So, yes, there are two sureties still set to sign on. The bail has been guaranteed by secured against equity of his parents' home. It was $250 million in total. But those two additional sureties are there to make sure that if Bankman-Fried didn't appear, that rest of their money could come in. So these two people of considerable means. Bankman-Fried asked the court yesterday to keep their identity a secret, fearing that they would receive potential harassment as a result of being involved with this case. And they have to sign on by tomorrow, actually. So hopefully they'll get there, and then he get to keep his bail.
So we know that there are 8 cases against him, Emily. What else? What are we going to be watching for? I mean, October is maybe the next time we learn more detail here, or are we looking for things in the meantime?
So there could potentially be developments between now and October. There's always the potential that he may sign a deal to arrange some kind of plea bargain. That, however, is rather unlikely. And there is also the opportunity for Sam now and his lawyers to learn a bit more about the evidence that prosecutors have against him. So these next 4 weeks, for example, where the prosecution has to enter in all of their evidence, those will be important weeks for Sam's team to decide exactly what kind of case he has, and that will then determine whether or not he might enter a plea bargain before the date of a trial.
All right, Bloomberg's Emily Nicole, thank you so much. And of course, to continue to follow this story, make sure to tune in to Bloomberg Crypto every Tuesday at 1 p.m. New York time, 6 p.m. in London. That's our weekly show that covers the people, transactions, and technology shaping the world of decentralized finance. And of course, we are always focused on the FTX saga. So tune in next Tuesday, but let's get a look at what is ahead on this current Wednesday. At 9 a.m. Eastern time, the World Health Organization is holding a virtual news conference on global health issues as concern over new variants grows on China's reopening. Then at 10 a.m. Eastern time, we'll get some economic data here in the U.S. ISM manufacturing expected to show factory sector activity is continuing to prepare for a weak future. Plus, we'll get JOLTS jobs openings released at that hour as well. Then at 12 p.m., lawmakers will reconvene and continue voting after Kevin McCarthy failed 3 times to win a majority and get the House speakership. Then Fed minutes coming out at 2 p.m., likely to show policymakers concerned that the labor market is not cooling fast enough, Anna.
That is it for Early Edition. Surveillance is ahead. The team will be speaking to Mike Wilson, Chief U.S. Equity Strategist at Morgan Stanley. Great to get his view so early in 2023. This is Bloomberg.
What about cryptocurrencies? Are you a believer in cryptocurrencies?
No, I'm not a believer in cryptocurrencies, and I would say that cryptocurrencies are a bubble. And I would describe cryptocurrencies as a limited supply of nothing. So to the extent there's more demand than the limited supply, the price would go up. But to the extent the demand falls, then the price would go down. There's no intrinsic value to any of the cryptocurrencies, except that there's a limited amount.
Well, based on what you've just said, why would you not put a big short of some type on cryptocurrencies? Or maybe you have, but do you think that's a good short?
Well, you know, when we look for these subprime, the reason why we shorted the subprime in size because it was asymmetrical. You're shorting a bond at par that has a limited duration that trades at a 1% spread of treasury, so you can't lose more than the spread in the duration. Yet if it defaults, you can make the par amount. In crypto, there's unlimited downside. So even though I could be right over the long term, in the short term, as the case of Bitcoin, you know, went from 5,000 to 45,000, you know, I would be wiped out on the short side. So it's just too volatile to short.
Markets count down in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Real fundamental issues that are going to be pulling down inflation.
Next quarter or two, we stay in this nominal GDP dwarfing real GDP environment, right, driven by still elevated inflation.
You can't ignore the shorter term data. You have to take it all into account.
I think we see equities down in the near term, possibly recovering towards the end of the year.
What's different this time, I think, is that if we have a recession, it's going to be a Fed-induced recession.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
The band is back together around one table, a beautiful thing. Happy New Year, TK.
Happy New Year.
Brett and I did that yesterday.
It's overdone. I'm done.
I'm done with You're done with Happy New Year.
Yes, okay. Let's move on.
Larry David said you can have about 3 more days if you want it. You don't fancy it? Okay. From New York City this morning. Good morning for our audience worldwide on TV and radio. Happy New Year. Let's talk about Tesla. Tom, the stock down by some 12% in yesterday's session. Bit of a bounce back this morning in the pre-market by about 1.5% or so, but huge pressure on that stock, TK, to close out last year and to begin this year as well.
I have no idea where the tip point is for Mr. Musk, but as a predominant shareholder, I noticed on the HDS function on the Bloomberg terminal, this is the lineup of who owns what. Vanguard, BlackRock, all the index funds out there with obligatory ownership. He's at about a 3 factor over them. He has 11, 12% of the company. Whatever the number is, it doesn't matter. The answer is with this plunge down and this new leg lower, the critical thing is where is that tension point for Mr. Musk?
I think it's right here, right now. We're down 60% since the start of Q4 for that name. It's been brutal. I'll catch up with Pierre Farago a little bit later of New Street Research. Still bullish this name.
601 and you're already promoting your show?
Well, I'm promoting Pierre Farago of New Street Research.
Okay.
At 9:40 Eastern Time on Bloomberg Television for anyone interested. Now you've mentioned it. Lisa, this is his line. It will be able to grow fast and maintain superior margins for years to come. The bulls are still out there saying buy this name.
But it's not showing up in the price. And you're seeing that from Kathy Wood as well, saying that she's going to buy this dip. She's been saying that in every dip, all the way down about 70% over the past 12 months. I am curious, though, about whether we see a similar type of decline in the deliverables from other automakers. We see that today with some of the auto sales numbers for December. Do we start to get a sense that Tesla isn't alone? And if it is alone, does it get punished all the more for possible loss of for dominance?
Well, it's not just Tesla and it's not just the automakers. Tom, it's Apple as well. Apple yesterday down by more than 3%, close to 4% lower on the session. Lowest level since June 2021. TK, on that name. I mean, it's real. It's not just Tesla, it's Apple as well, going into earnings at the end of this month.
And it's earnings, and it's I'm going to go to revenue. I'm not going to go to the earnings line and the margin line. I'm going to go to the revenue line. What's Apple's revenue out of the manufacture and particularly the sale in China? Carl Weinberg had a brilliant note out here saying China could go either way. He didn't make a prediction. He says there's too much uncertainty, but he says the certitude of a China opening, it has to be measured.
A major issue for that name right there. Futures more broadly elevated this morning by about 1/3 of 1%. We'll rip through the price action for you briefly. On the equity market, up about 13 points on the S&P. In the FX market, euro dollar 106.21, euro dollar positive 0.7 of 1%. TK, you mentioned inflation out of Europe. I think you mentioned Spain yesterday.
Yeah.
Germany as well. Take a look at France this morning. Can we get some disinflation?
Number one thing I'm watching is disinflation. Variant Perception out on Twitter, a smart one to follow, has a linkage of fertilizer prices to food prices. Fertilizer prices like lumber have cratered, and that is the signal of a potential disinflation in American food prices like what we're seeing in Europe.
Well, yield's coming down right now by another 4 basis points on a 10-year. Lisa, right now this morning, 369.39.
The data is confusing, and I will say this because when you see, for example, the weaker than expected inflation print in France, you also see stronger than expected ISM services data coming out of Europe. So this is really complicated. Perhaps we'll get some more complication at 10 a.m. today from the United States. We get December ISM manufacturing, and we also get November U.S. JOLTS data. Do we get the job openings really coming down as fast as people want, or do you start to see ongoing resilience, ongoing stickiness in how tight the labor market is, which really flies in the face of some of the weaker than expected inflation rates that we've been seeing around the world? Today, we were talking about Tesla and the weakness that we saw in those shares yesterday following weaker than expected deliverables. How much do we see that in other vehicle makers? We get U.S. vehicle sales today, including Toyota at 10, GM at 10:30. Those shares all across the board in the automaker space have been pummeled over the past 12 months. You've seen them down more than 50% if you take a look at Ford. So again, yes, Tesla in a world of hurt, but so are the other automakers as they face chip shortages, as they face also people who cannot afford, to the degree that they once were, autos that have gone up massively in price. And at 2 p.m., we get the FOMC meeting minutes. I want to understand the terminal rate. I want to understand, John, to your point, the balance of risks. Do you start to feel like there are more Fed members concerned about hiking too fast and stymieing any kind of recovery, creating a crash too soon, given the deceleration in inflation? Do we see, I don't know, transitory light start to creep into the conversation?
The T word. You bring back the T word this early in 2023. Ramo, thank you. The T word back on the tabletop.
It's very transitory. I thought the level of gloom, I really couldn't judge it yesterday being with Ian Bremer down at Eurasia. Thank you, Dr. Bremer, for the hospitality and smart conversation. I'm sorry, the Bramo gloom level yesterday was at a certain early New Year weight.
With an odd sprinkle of bullishness.
Yes.
Just
it was,
here and there. I was struggling to make sense of it myself.
I had no idea she was back.
The edge of incoherent.
The edge of incoherent. And, you know, I said to Ian, I'm sitting there with Dr. Bremer, and Bremer's like, is she always like this? And I said, it's the Bramo world of hurt.
Every single day.
It is. It's a world of hurt.
I'm still here, just letting you know.
Didn't take enough time off over the holidays.
I know.
That was what it was about.
Some time, and it was wonderful.
It's a Bramo world of hurt. I mean,
committed to pain and just self-torture. Ben Lather joined us now, global market strategist at eToro. Ben, thank you for being with us. Ben, you've got 3 reasons to be constructive, bullish through Q1. What are they?
So I think the inflation and interest rate shock that drove markets weaker in 2022, I think that sort of fever is breaking. We're probably going to get our 6th straight month of lower inflation in the US next week, and we're getting visibility on the top of this Fed interest rate cycle. I think the sooner that comes, the sooner that gives a little bit of relief to recession expectations and to valuations. That's 1. 2, China's going for growth. That's what you're seeing with this surprisingly quick loosening up of the COVID, zero COVID policy. This is the 2nd biggest economy in the world. If they can stabilize growth over the next quarter, and it will take a little bit of time, I think that goes a long way to reducing these global recession risks. And the 3rd one, which you alluded to at the beginning, global equities can't do well this year unless tech does less badly. Broadly defined, it's 1/3 of global equities. I do think earnings will be under pressure. We forget how cyclical some of these tech stocks are, and I think that's what you're seeing with Apple and sort of Tesla right now as these sort of recession concerns mount. But also, remember, valuations have been absolutely crushed. And if bond yields stay well controlled here, and with valuations having turned around, I think that's where you're going to get some tech relief this year.
Ben, you pull economics into your strategy, and the key theme of your economics is we see inflation adjust from a goods disinflation over to a service sector disinflation. Give us the level of confidence in that process.
Direction of travel, absolutely. I think it's more about the speed, though. Everything we've seen so far has been, goods disinflation, easing up of supply chains. That's great. That's given you these 5 straight months of declining inflation, and now what looks like our second straight month in Europe. What we need to see, and more importantly, what the Fed needs to see, is that just continuing to spread into the labor market and into services. I think if we look at the forward-looking or the coincident data, and we're going to get the JOLTS today, we're going to get the ISM prices paid data today, we're going to get the ISM employment data today. These are the types of things I'm looking at, not at this sort of backward-looking sort of mirage of sort of US sort of reported housing inflation, which basically I don't think a single person in the US actually pays. But if you look at that sort of coincident or forward-looking data, I think it's all easing. We would like to see it easing quicker, and I think you're going to get sort of more incremental data points, hopefully starting today, which gives a sort of less bad outlook, and that's all you need to see when sentiment is as depressed and as bearish as it is right now. You need a little bit of less bad news, and that's all. I think all you need to take markets higher.
Well, we had a little bit less bad news yesterday and today as well. When you look at inflation easing a little bit faster than expected in the Euro region, we saw some stocks try to rally, not tech, and that's something that is notable. So what's going to send tech higher other than suppressed valuations, as you believe is necessary for a bullish outlook?
Yeah, I think tech's going to take time. I don't think tech's going to lead here. All I'm saying is you can't have tech be the drag on the market that it was last year. I think there's a shoe to drop on tech earnings, and we've started to see that with the tech revisions coming down quite hard. But I do think a lot of that gets offset by valuation. You touched on Tesla, earlier on. Coming into last year, that was on a PE of something like 130 times. Now it's on closer to sort of 25 times. I'm not saying that's the right number, but you've seen an absolute turnaround in valuations, and Tesla is still growing earnings, well into the double digits. So what is the right number? I don't know, but you've seen an absolutely dramatic turnaround. And I think if bond yields stay at these levels or come down from here, I think that is going to be a key support that was really missing last year.
You've touched on the broader signal you can take from a single name. We talked about Tesla there, Ben. Can you talk to me about Apple? What's the signal that you take from the price action there through December and into January?
I think this is the same story. This is consumer discretionary was the worst performing sector last year. Investors worried about this slowdown in goods demand. Investors worried about the cost of living crisis on the consumer. The consumer really reached for that $40,000, $50,000, Tesla car, or that, high-priced piece of Apple hardware. The market is increasingly telling you no. And I think the closer we get to, recession, and this is a race between the top of the Fed cycle and recession, I think the more those concerns are just going to continue to add, and I think that's all you're seeing here.
Ben, appreciate the perspective. As always, thank you, sir. Ben Lader there of eToro. Looking ahead to some earnings a little bit later this month. Apple at the end of January going to be in big focus. So here's the challenge of this morning, and AMH has really got to pick it up in about 10 minutes' time. TK, can you explain what on earth is going on with Kevin McCarthy down in Washington, D.C.?
Some good work on this morning. A shout out to Carl Hulse, legendary at the New York Times with over 30 years of work on this. The word he used was squandered. And what we have here is a majority party squandering their first hour, their first minutes in office. It is historic. It goes back 100 years. It's going to be interesting today, and I think it does merit scrutiny into this afternoon today to see how this soap opera unravels.
This is history, right? Kevin McCarthy is the first person to not get elected House Speaker in the first round, going back to 1923, and only the second person since the Civil War. This is highly unusual. I don't understand why the market's not responding to the likelihood of a possible debt default. I mean, honestly, because this really raises a spectrum.
You take it that far.
Well, I mean, look, my job. I just start looking. I start looking. When you look at all the discussions, look, we're running out of time. Look at that.
We've got so much time.
Okay. Honestly, I do wonder whether this raises a specter of not being able to get stuff done. Real stuff that needs to get done this coming year.
Just for the record, you spent months laughing at British politics.
This is like top tipper.
Come on, guys.
Oh, man, revenge.
Sarah Hunt of Alpine Saxon Woods coming up in the next hour. Look out for that. AMH down in D.C. is coming up next.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Well, you just heard about it. It was chaos at the Capitol. Republican Kevin McCarthy saw his longtime ambition of becoming House Speaker slipping away after a humiliating showdown with a conservative minority. In 3 rounds of balloting, McCarthy couldn't get the votes he needed to become Speaker. He'll try again today. The Federal Reserve is about to shed more light on why it's worried that strong inflation may linger. Today, the Fed will publish minutes of last month's policymakers' meeting. At the end of that meeting, Fed officials published new projections showing they expected inflation would end 2023 higher than they previously thought. More signs of easing price pressure throughout the euro area. Inflation in France unexpectedly slowed last month. Consumer prices rose 6.7% from a year earlier after record increases of 7.1% in October and November. That's a relief for European Central Bank policymakers who opted for a smaller half-point rate hike at its last meeting. China is pausing massive investments aimed at building a chip industry to compete with the U.S. Bloomberg's learned that top officials are discussing ways to move away from costly subsidies that have done little but encourage graft and American sanctions. The recent COVID outbreak has been straining Beijing's finances. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Politics to the world of business. Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg.
Part of what I love about business is you get to build things from nothing.
I don't have any investors. All this is all money in. This is me just building it.
It's pretty much full-service shadow banking with nobody in charge.
It's the first jobs report of the new year.
The labor market has not cracked.
A lot of that's a function of labor shortages.
This Friday, Tom, Jonathan, Lisa, and Mike will bring you crucial data and expert analysis at terminal speed.
Can you walk us through how the Federal Reserve conversation has reset?
We're still seeing a strong economy, so the Fed has to do more.
Why are people so confident that there is going to be some massive deceleration?
I just don't see the evidence.
This could go a lot of different ways.
The December jobs report, Friday on Bloomberg Television and Radio.
Today, is it the day I wanted to have? No. I mean, there was a lot of things we wanted to do. We wanted to repeal 87,000 IRS agents. We wanted to set up the number of investigations we had going. We wanted to notice the different committee hearings we'd have actually on the border. None of that got transpired. But if we're able to work out our differences and take this time, we'll only be stronger to be able to accomplish the things we want to do.
Representative Kevin McCarthy of California struggling to get the votes to become the next speaker down in Washington, D.C. On the other side of the aisle, Democrats casting their votes for Representative Hakeem Jeffries of New York.
Sad day for the House of Representatives as an institution. Sad day for democracy. We are prepared to try to find common ground with the other side of the aisle to solve problems on behalf of the American people, but we don't have a willing partner in House Republicans.
TK, a messy 24 hours for House Republicans.
Lesson in civics, I think, is what we're seeing right now. We're going to get an update here right now with Anne-Marie Horton, our Bloomberg Washington correspondent. Anne-Marie, I want to go to getting things done. Today, there's massive symbolism of the President of the United States and the gentleman from Kentucky. They'll be where I-75 and I-71 cross at that bridge between Covington and Cincinnati. You know well the Waffle House on the Kentucky side of that bridge. Anne-Marie, that's what it's about. Republicans and Democrats coming together with fat, with pork, and all that, and building bridges. Can these Republicans do that a week from now, a year from now, 4 years from now?
Literally building bridges, right, Tom? The president is going to be showcasing the work he did with Republicans in getting that hard infrastructure over the line during the first, 2 years of his presidency. And he's going to be standing there with no other than Mitch McConnell, the Senate minority Republican leader, who at this point actually is the longest service Senate leader. And really, he celebrated that milestone yesterday. Very different scenario than is what is going on the other side of Congress. And to your question, what we are seeing happen in Congress, which is the fact that at this moment, it is Groundhog's Day in D.C. The House is speakerless, and there are only members-elect. Not a single individual was sworn in, because the first order of business, which is largely ceremonial, is to elect a speaker. And if they cannot even decide who is going to lead their party, this foreshadows and really asks serious questions about how they're going to fund the government, how they're going to honor U.S. debt, how are they going to potentially coalesce about another Ukraine package. And it doesn't seem that this is going to be a viable Congress.
Anne-Marie, you should see the Bramo cam right now. Bramo's lit up like a torch.
Is she rolling her eyes?
No, I'm not rolling my eyes. I'm emphasizing what you're saying because you're getting to the point. Go on, Tom.
No, please, Lisa, I insist. Please, a question for Ms. Horton.
But Anne-Marie, this is exactly what a lot of people are worried about, and I was surprised that we didn't see any kind of reaction in markets. This is kind of the similar dysfunction that you saw in 2011 that led to a lot of the debt default debacle that led to the big sell-off and ultimately an agreement. However, the turmoil to get there was significant. Why is it not just going to be a repeat of that? Is there signs of hope that we're going to avoid that kind of gridlock heading into year end?
Not just significant in terms of politics, but significant in the sense that the U.S. was downgraded in 2011. We also saw this from the Republicans in 2015 when the hard right wing of the Republican Party ousted John Boehner. Now you are seeing it almost on a different level and a different scale. I think a lot of individuals in New York, because I was getting a ton of messages on the terminal from people saying, it's baked in, it'll be a show, and then they'll agree on McCarthy, it's all politics, et cetera. And maybe to a point that is. But when you wake up this morning and he's on the phones overnight, and so far you've heard from none of the 20 individuals, this was a rebellion against him. From 20 individuals, he can only lose 4 if every member is present, not saying they're going to switch his vote. How are they going to get anything done down the line? This isn't just passing simple legislation. Which usually, more complex legislation, which you could see a little bit more of ideological and policy differences. This is becoming more personal.
Well, and who's leading the rebellion, right? Because Donald Trump at one point supported McCarthy. Now he's sort of on the fence, not saying anything. A lot of people are coming to ask him for his praise, he says. But I'm just curious from your perspective, is there a leader to the opposition, or is it just a free-for-all?
Well, it's really members of the Freedom Caucus, and not all members of the Freedom Caucus, but a group of them. You know, notably, you have the likes of Laura Boebert and Matt Gaetz, who also yesterday sent a letter to the architect of the Capitol asking why you had Representative McCarthy moving his boxes and furniture into the Speaker's office, given the fact that he was not yet elected Speaker. So you have these rebellious individuals who a lot of it also is, it's not really about policy. They don't want to see him become Speaker of the House.
I look at this, Anne-Marie, and I think of Scalise and others who are supporting McCarthy, and yet they're also picked to be future leaders of the House. Let me pick on Jim Jordan of Western Ohio as well. Who is he taking his cues from? his electorate from Mr. Trump, as Lisa Abramowitz mentions. Where are the cues coming from for these 20 people other than a primal, what I'm going to call, libertarian scream?
Well, they're definitely trying to make a point, and it doesn't seem like they are going to back down, even given the fact that McCarthy has really given up a lot of concessions, even making it so much easier for no confidence vote, aka being able to fire him on the spot. But when you think of the likes of Jim Jordan, obviously he was at one point a fierce rival of McCarthy, now an ally. He actually nominated him on the floor, and then a moment later, Matt Gaetz nominated Jim Jordan.
Mary,
but he's not going to get the 218 votes.
This is too important. What is the theology of Jim Jordan, wrestling coach of Ohio? What is his belief? Talk to our international audience about this.
Well, he is part of the ultra, what we can maybe call MAGA right of the Republican Party. But what I'm trying to paint a picture of for you, Tom, is the fact that he is not part of that rebellious group. He is actually voting for Kevin McCarthy to become Speaker. It is individuals of that rebellious group that are coalescing around him. He's ultra-conservative, but he is not going to get to 218, and everyone knows that. So then you have the likes of Scalise, and then even potentially in what the Hill is calling a breaking glass moment, maybe Patrick McHenry, which I know, Tom, you know very well.
Hey, mates, just briefly, how much longer can this go on for?
Days. I think at one point in history went on for 2 to 3 months. But yeah, it could go on for days. They could have a similar situation today at noon and then adjourn until they figure out who is going to become Speaker. And no legislation can get done until they have a Speaker.
I mean, I know we got to go, John, but you know, in Wikipedia, Marjorie Taylor Greene of Georgia, Wikipedia has her as an American politician, businesswoman, and far-right conspiracy theorist. She's for the gentleman trying to be Speaker. She has said to these people, you're out of your mind. I think that's just critical to line up the ducks here.
And Marie's touched on this a few times in private conversations we've had and public conversations
She talks
as well.
to you?
Privately
She
sometimes
never talks
too.
to
Gives me a phone call and lets me know what she really thinks.
I haven't talked to her in like 8 months.
Anne-Marie, can you tell us how strange it is to have an individual like that being seen as the voice of reason in a moment like this?
Yeah, she's saying that they're being, obstructionists and that they need to get on board, and that she was personally not even given a concession for herself. She's not even on a committee, she says, but she's still going to be backing Kevin McCarthy. And she thinks that what her friends in her Freedom Caucus are doing is showing to the American people that they cannot govern. So you do have this very awkward moment when you have this individual who is, a QAnon individual who has delved into the conspiracy theories being the voice of reason on the right.
AMH, down in Washington. TK, what a messy time.
I learned a lot there.
I always learn a lot.
It's embarrassing. I mean, does it allude to the embarrassment of the British government process 8 months ago? Maybe. But this is worse.
Why are you prodding this?
We'll continue this in a commercial break. Need like the live camera of the conversation, the commercial break. As things get really fired up.
A little big. Do the ad a little.
Wikipedia, great source, Tom. Great source.
I went to.
Nutrigenomics and precision nutrition is one of those rare scientific fields that overlaps with the Instagram-friendly wellness industry.
There is a lot of interest in this idea of personalized nutrition, and especially how accessible it is to the public. You can go on Google and type personalized nutrition or diet and genes, and you will find dozens of different companies that offer this nutrition precision tests.
One of those companies is Routine. Routine claims that their personalized tests stemming from sciences like nutrigenomics make their supplements different. But even with the claims from Routine, as well as dozens of other personalized nutrition companies, the science still has a long way to go.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Equities trying to bounce here. Equity futures positive by 0.4% on the S&P 500. On the Nasdaq 100 right now, up by 5 or 0.6%. One stock to watch in the pre-market right now. It's Salesforce. Here's your headline. We hired too many people leading into an economic downturn. And here come the cuts, Tom. They will cut the workforce by about 10% in a restructuring effort. The stock up in early trading, Tom, by 2.5%.
Mark Benioff with some executive turmoil wrapped around that. I'm sure it's been a huge discussion and debate there. What I would point as a stock is 3.5 standard deviations off a solid long-term trend. This is a stock that's been really on a cash flow driven, revenue building, like a ruler trend, and it has been decisively broken with this pullback.
Just a little bit more detail here. The workforce cuts will mostly come over the coming weeks. They go on to say the plan will be substantially complete, Lisa, by the end of year fiscal 2024. So 10% is a big slice of the workforce. And you just wonder, who's next, and how quickly and how hard do they need to go?
Especially, look, Salesforce had been in turmoil for a while. Tom was touching on that. Massive executive departures. There's been a lot of questions around its future. There's been a huge decline in some of its valuations in the stock market. How much does this also indicate the difficulty of tech to revive itself? Because it's not just the big tech names, it's also software, some of the basic functions that companies were looking to try to gear up during the pandemic that now find themselves overvalued.
So they all overbuild. Well, I mean, that's all there is to it.
Oh, the tech companies, yeah. That's
tech,
where the excess is.
They all overbuild and they're adjusting, right?
Without a doubt. There's another dimension to this as well, Tom, and you see it in the headlines coming from this release. Select real estate exits and office space reductions as well. Now, that was a feature of the pandemic. We had that big conversation. I think, Tom, do we need to renew that conversation as these companies pull back and cut?
Based on my conversations in New York, yes. There is a moment here with the whole work from home off the pandemic dynamic that's tangible. I would note the headline here, and this sounds like classic Mark Benioff, affected U.S. employees to get minimum nearly 5 months pay. That's the way Benioff shows people the door.
But it goes back to your point, John. Is this just a tech-specific name type of a situation, or is this broader? Because you see at the same time that you see tech companies pulling back on office space, you see the Morgan Stanleys and Goldman Sachs of the world saying, get back to the office right now. It's full-time. It's back to where we were pre-pandemic. And you're seeing that with more and more companies. So it is a very difficult, really, one to parse, given some of the layoffs in the tech companies, as well as some of the pain there, versus the resilience and the ongoing commitment to office space in other places.
Let's borrow their own language. We had too many people leaning into an economic downturn. Now, for many people, they can't fire what they couldn't hire, because there are a lot of people out there that couldn't hire going into this downturn. They were trying to, they couldn't deliver on it. So really, who were the individuals, the companies, that were able to beef up the workforce in the way they wanted to? That's where the excess is going to be. That's why some people are looking at the labor market data and saying, you know what, maybe this labor market data won't have that big turn lower in this downturn. because there's so many companies out there that just couldn't hire the labor they wanted to hire in the upswing.
Well, and there's a rolling boom and a rolling bust, and it's idiosyncratic. And you see the retailers, for example, and the service sector continuing to hire, not laying people off because they couldn't get anybody during the pandemic. I do wonder whether you get more office workers who get laid off in this next wave of whatever kind of downturn this is, and more resilience in some of the other service sectors.
I'm going to wait for the data. It's like the Spanish and French inflation. You just wait for the data and see. We've got, Jolts is today, right?
Yeah, job openings.
It's Jolts Wednesday.
Oh, you're branding it.
Thank
Jolts
you,
Wednesday.
Of course. So McKee would want that. Jolts Wednesday, fine, into a critical jobs report, all of it secondary to January 12th. On January 13th, we know a lot more than we know right now.
Tom, this is the issue, isn't it? We're looking at delivering, 200,000 payrolls growth again on Friday.
I haven't even looked.
Unemployment still in at around 3.5%. Wages at around 5%. You mentioned Jolts, job openings, 1.7 jobs open for every unemployed America. They're the official statistics.
200.
And then you've got these big tech companies screaming, no, we're doing something else.
I just, and at what point does that something else bleed into the broader numbers? We're not seeing it yet. Every time we get these numbers, the question is, where are all these tech layoffs that we've been reading about and all the others?
Well, they're there, but, there's been some reports that these people are losing their jobs and getting jobs quickly. I got to be careful with that. I got to, I don't
In finance, too, if you noticed that,
fact.
we had that story out a couple of weeks ago about Goldman making major cuts. And then you had, HSBC were talking about sending out emails to people being laid off by other banks. Santander as well.
I missed that.
Yes,
doing the
I
same
saw
thing.
that. Mizuho also. I mean, honestly, just trying to beef up particularly talent in the U.S. So it isn't exactly Armageddon for the jobs picture, even in the banking and tech
It's this
sector.
odd situation. It was about who was able to attract the talent as we're really trying to beef up the staff. And dare I say, there was a hierarchy of banks that were able to attract the talent. There were other banks that weren't able to. Then these big banks that were able to are doing the cuts. And these other banks that want to beef up in certain areas, certain regions, dare I say, lower down the hierarchy for certain individuals, Santander, HSBC. That's where the demand is.
This isn't a picture of pain for the labor market by any means.
A picture
of pain.
Picture of pain.
It's about where we're going to end up. And when we go back to that word cumulative tightening, right?
There you go.
From Vice Chair Brainerd. Ultimately, we're still trying to answer that question. How long is the lag from the cumulative tightening we've already seen, and when will it show up? How short is the lag as well? I mean, we've got to work all these things out in the year ahead. And Tom, it's a guessing game. Let's be clear about that. It is a guessing game for these central bankers.
I can't emphasize enough how all my thinking over the holidays, including a 10.96% rise in the price of champagne, is colored by the pandemic. We're still,
I'm done.
Lisa, do you
I'm
agree?
Done. You can't,
we're
no.
still,
I'm done.
We're still working.
Come better anyway.
No, we're talking about job cuts. He's talking about the cost of champagne.
I'll just bring it back to the job cuts for one. Bill Dudley yesterday,
Sure.
who you did speak to, Tom, he puts the number at sub 100,000 jobs being created for several jobs prints consecutively to get where we need to get